Hello everyone. Am I audible? Right. Okay. So before we start, those who have joined today, like, are you all full-time traders or what? Like, what's your background? Specifically, Ashutosh, uh, Nish, Nitish, or Kiran, Vikesh. Okay. Okay. So those who have joined new, uh, just to make you familiar with the platform. So basically, everyone will be on a mute mode. If anyone has any questions, there's a raise hand option. If you click on the chat, there's a raise hand option. If you raise your hand, we'll unmute you all. And like there'll be specific times where I'll unmute everyone so that you all can ask questions. But most of the time, you all will be on mute so that there's no disturbance to everyone. And I think most of you all, if you have any question, like if any technical problem is there, like you can directly contact Dhiren. Dhiren, put your number also in the chat. Okay. 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 So let's start. Okay, Kiran. Okay. So let's start. Okay. So basically, this will be the flow of today. Today will be mostly like not little like not much advanced. Like I'll try to cover some basic concepts also, which most of you all are aware, but I use it in a different manner. So I'll just touch upon them, and then we'll. So basically, I'll tell you what is quantitative trading, how it is different. Then we'll discuss some basic terminologies, and going further, we'll discuss a lot of trading systems also. So the main goal of this workshop is to help you all build your own trading systems. I'll even show the backtest report of the systems we use, and we'll cover like a lot of different type of systems, which some are directional, some are non-directional, some are volatility based, so that overall you can run them together to make an overall good portfolio. Okay, so just wait. So basically about us, so Quantify Capital is a quantitative research firm. uh, we use a lot of data to build our own strategies, and other than that, uh, we also, so basically our goal is to use data to build strategies. So our majority of the work goes in back testing our strategies, and we do it consistently. So that's what we majorly do. This is something which we started recently. So this is the trade room. It's a co-working space for traders. The main purpose to start this is to help traders become more systematic and data driven. So there are a lot of many traders here, but now due to lockdown, it's shut. But it's in Mumbai, so a lot of traders currently come here and we trade together. a big firm with 150 branches across the country, all top institutes of the country. Okay, so like enough of the introduction. So let's start with the story. So basically, I first want to give you all a perspective, and then we'll delve into the finer details. So initially, most of the things you might be know also, but I want to give a perspective what I feel works in the market and what is my approach. So let's start with a story. This is a true story about my friend. His name is Raj. So this is Raj's portfolio, which he built, I guess, 2 or 3 years ago. And he invested, I guess, approx 20 lakhs. His hypothesis was, okay, all these are good companies, I'll buy and hold, right? So he invested 5 lakhs in each company. So can you tell me like, what is the current value of Maruti, Yes Bank, Tata Motors, Edelweiss? So overall he invested 20 lakhs, but you can see that almost all stocks are more than 50% down. Like Maruti is around 5,000, Yes Bank 90% down, Tata Motors I think 70, 80, Edelweiss 40, which means the portfolio is down almost 70, 80%. But if you ask any normal individual in the country, he would say, yeah, this is a good portfolio. Like it diversified also, the stocks are also good. So it's a good portfolio. So what is Raj doing now? Obviously, he's crying. So let me ask you one thing. What did he do wrong? I'll just unmute you all. Because I think there should be. Okay. What did Raj do wrong?
He didn't put SL.
Okay. Other than that,
Wrong timings.
wrong.
Timings.
I mean, but people say you cannot time the market, right?
Yeah.
So, but is it any flaw in the stock selection process? Because if you ask anyone, he would say, yeah, the
Public.
stocks looks decent.
All well-known stocks.
Yeah. So like, so you still see Maruti cars on the road. Yes Bank branches are still, Tata
Yes.
Motors cars are still there.
Yeah. But which already, like S Bank, they were in trouble. And
But that happens later, right? What are we being said? Buy and hold, right?
Yeah.
So what went wrong? Like, do you think most of the people approach the markets in a similar manner? Hello.
He bought all the stocks at high valuations.
But who knows what is the high valuation, right? Who knows what is high? In the bull market, stocks become even 100x, 200x, right? I is relative, right?
Yes.
Who knows what is high? Kmart is trading at a P of 120. It could be high for someone, but still the stock is rising every day. Is it clear? Like there's something wrong. Everyone agrees.
Yes.
Okay, so I just want to bring my first point. A good company does not mean a good stock. Do not only rely on fundamentals, right? We need something else also. How do I make this interactive? I'll do one thing. I'll look for any now. Okay. See, those who think there is some disturbance around them, they can mute themselves. Rest will continue in this manner only. So the first point is that a good company has a good stock, and we cannot rely only on fundamentals. which means we need something else also. That will when we come later. Everyone has heard this, right? The house always wins.
Yes.
So what is this house? Which means the casino always wins. So how does the house always win? I want you all to answer this.
More probability.
They have some age, I think.
Just by using this machine, casinos make billions every year by using this small roulette machine. Can anyone tell me what is the probability of red here?
50%.
Okay, and probability of black?
50%. And 1% of that
Okay.
green.
Let's see what others say. You all can type in chat. Should I just need a feedback once. Should I unmute you all or should the discussion be in the chat? No. No. You all, but make sure that you're in the chat. Okay. Okay, fine. So okay, we'll discuss in the chat only. Okay, fine. Just give me a second. So some people said 50-50, right? It's obviously not 50-50. Why? It would have been 50-50, but if there were equal number of red and green balls. But what did the casino do? Casino is smart. It introduced two green balls, 0 and 00, right? Just by introducing these two balls, casinos can make a lot of money. So let's see how they do it. You all can see this whiteboard, right? Okay. So there were red ball, black, two green balls. So what is the probability of red? 18 by total numbers are 30, right? That comes 47%. So your probability of winning is 47%, which means if you bet on red, you can win 47% of the time. So casino's winning probability is 53% approx. So casino's edge over you is only 5%. This point is clear, right? Just by using this machine, casinos can make billions every year. How? Casinos just introduced you two green dots so that they skewed the probability in their favor. So now your winning probability is 47 and casinos winning is 53, right? So how do they make money? Does casinos bet on luck? Okay, I will make money if I'm lucky. Casinos make money because they have a built-in advantage called the house edge. This edge, what is the edge? Only 5%, but they exploit the edge continuously to make money. We all want to be the casino, right? If we are in the markets, we want to be the casino. So how can we be the casino? First is build a system with a statistical edge. In case of casino, the edge was 5%. We can also build our own system and that system can have some edge. Bet only when you have a good probability of winning. How do we know that we have a good probability of winning? Back testing, that we'll discuss later. But if we back test strategy, we know when to bet, when not to bet. Bet on repeatable patterns. Repeatable pattern. So, for example, if you test a strategy and there's only one trade a year, which means you cannot make money also. You need patterns which occur frequently, right? Exploit the edge. Exploit the edge as in, see, casino. It could have been that casino can lose 2 hands, 3 hands in a row. But if it makes it, if you play for 100 times, casinos will win in the end, right? Because the odds are in their favor. So what most people do is when they approach the market, they follow system, 5 back-to-back losses, they stop trading the system. But even good systems have back-to-back 9 losses. We have systems with good equity curve, but the losses, back-to-back losses are even 7, 8, 9. Which means if the system is good, we have to exploit the edge. Like we should not judge the system based on 1 or 2 trades. We should make n number of trades to decide whether the system is good or bad. And the final thing, which is most important, is, oh sorry, can't see. Okay, can't see the board. Oh sorry, I didn't see the message. Okay, so basically, what was it? Wait. So basically, in this, there are 18 red numbers and 18 green numbers, and 18 red, 18 black, and 2 green. So your probability of winning is, if there were no green numbers, would be 18 by 36. But now there are 2 green numbers, so your probability of winning is 18 by 38. So your probability of winning 18 by 38 is only 47%. So casino's winning probability is 53%. So the casino's edge over you is only 5 to 6%. Just by using that edge is called the house edge, the casinos is able to make a lot of money every year. So we want to do the same thing in the markets. How can we do the same thing in the markets? We can do the same thing in the markets. Wait. Yeah, we can. So first thing is we have to build a system with a statistical edge. How? So basically, whatever. So that is done through back testing. So once we back test, we know what is our edge. We'll bet only when we have good probability of winning. That also comes from back testing. We'll discuss back testing. The final point which I was on is win big when right and lose small when wrong. See, if you have a system which has only 50% accurate, but if you win one and when you're right, you're winning one, and you're wrong, you're losing one. So basically, you're not making any money. In fact, you are paying brokerage charges, so net you're negative. So when you design a system, it's important that when you are right, we have to win big, and when you're wrong, we have to lose small. So how does the casino do that? How does the casino ensure this? That when they're right, they win big and they lose small when wrong. You can write in chat. How does the casino ensure that they able to implement this? Win big when right and lose small when wrong. By placing limits on bets. Yes. So what you do is every table has a limit, which means you cannot bet more than this. So by doing this, casino is ensuring that it cannot lose more than this. In our case, in the markets, it will be our stop loss. So basically, we ensure this that we don't lose more by keeping a stop loss, right? So till now, what we have covered is basically just fundamentals are not enough. So how the way people approach the market is buy good companies and hold, but that does not work anymore. So basically, a good company does not mean a good stock. So that we need something more than fundamentals. Okay, then we come to the example of casino. How is casino able to make money? We want to replicate the same thing in the stock market. But casinos ensure certain rules. We have to follow that also. That we have a system with an edge. We make sure that we take at least good number of trades to decide whether the system is good or bad. And when we are right, we win big. When we are wrong, we lose small. Right? So see, majority of the people lose money in the markets. It is due to majorly to these 4 reasons. First is they follow random tips and rumors. Right? They'll say, okay, let's buy yes bank, let's buy this stock just because it has fallen a lot. Do they have any strategy, any edge? Like, do they backtest? So the firms which we currently train, the largest trading desk, they also don't know what is the statistical edge. They have been doing it because they have been doing it for many years. But if I ask them what is the probability of back-to-back 8 losses, they cannot tell. Third thing is when they are right, they'll exit very quickly. They'll buy a stock at 100, exit at 102. But when they are wrong, they'll keep waiting till the end, like till the time it's 0. And they don't have any emotional control. Like if they make too much profits, they'll exit very quickly. Oh, okay, it's a good trade. If they are lost, they'll be stuck. They won't exit. So these are few reasons. So I'll touch upon each and every point during the slide. So emotional control we discuss in psychology. This will discuss in risk management. Second point we'll discuss in backtesting, second and first. So why quantitative trading? So the purpose of this webinar is to delve into quantitative trading. So why quantitative trading? See, earlier people used to trade on market instinct, tape reading, and every such thing. But as a lot of algorithms are coming into place, strategies are being tested, the edge of the people who trade discretionary is decreasing. If you want to compete with people, you need to have some kind of data analysis. So quantitative trading is basically using data for your decisions. So once you have data, you know when to trade, when not to trade, how much you can make, how much you can lose. I'll show some examples also. So if you can do that, then only you will be able to survive in the markets. So basically the purpose of quantitative trading is, so whatever strategy you trade, you have the back tested report with you. You know, so even if the strategy makes back-to-back 5 losses, you are fine because you have back tested it. So basically quantitative trading is using data to make your trading decisions. As we go during the course, I'll show you a few strategies with the backtest reports also. So that will make you understand how data is applied to trading. Who is this guy? Anyone knows who is this? Who is he? James Simmons, father of quants. Yes. See, when we come to investing, everyone talks about Warren Buffett, right? Can anyone tell me what is the CAGR of Warren Buffett compounding? At what rate has he compounded his money? 55%. Who is that? No, Raj, it's not 55%. Yeah, approx 17 to 80%. 18 to 20%, right? But this guy has compounded his wealth at 67%. His net worth is $22 billion and he's called the world's smartest billionaire. So 67%, which means if we compound this at the same rate for even for the next 10 years, he'll be the richest man in the world. I think more rich than the top 10 combined. So how is he able to do it? So basically he uses some kind of data analysis to make, so he does not believe in fundamentals and all such things. He uses data to make his decisions. And there's a rule at his company: if you have worked at Wall Street, you cannot work at his firm. Because if you worked at Wall Street, you apply your brains and you have some market preconceived notions. So all NASA scientists and everyone works at his companies. But the purpose to tell this is that using data, you can make money. See, most of the people follow Warren Buffett. I like to follow him. So it's not much known what he exactly does, but it's a proof that if you use data, then also you can make money in the markets. Right? Okay, so till now, anyone has any questions? First, I want to set a perspective before diving into strategies. So if anyone has any questions, please type on the chat or I'll proceed further. Okay, all good. Okay. And my voice is clearly audible, right? Okay, fine. So let's start. So till now, I just gave you a perspective that why do we need to do quantitative trading? Why not just buy and hold? And how we want to be the casino and we want to think like a casino. So we'll go into that. But till now, I just wanted to cover give you a perspective that if you want to be successful in the markets, we have to think like a casino, have a system, and use data for our analysis. So let's just have a look at this slide. People say that you need luck to make money in the markets. I totally disagree. See, 1996 to 2000, there was a boom in the technology sector. Infosys went 300x, Wipro went 390x. Come to 2003, Unitech become 150x, Jindal 100x. 2009, Oro Pharma 70x, Page Industry 50x. 15 to 17, HEG 10x. So what is one thing which is clear from this image? What is one thing if I ask you that you can understand from this image? Please guys type in the chat, like let's make it slightly interactive. When we tell about CAGR, how many years should we take? Any number of years is fine. Rajashi. Yeah, HEG cyclical stock, it has fallen huge after the rise. Okay. One sector leads the market. There's money to take all times. Okay, so what I have found out, every 5 years there are different sectors as market leader. Okay, Louis, like. So one thing is clear, that no matter what the broader market is doing, broader market as in Nifty, there's always one sector which is in its own bull market, right? This is one point. Second point is the name of the sectors will keep on changing. So Ashutosh made a point that HEG came back to zero, like it gave almost all the point. He's right. So what happened in 2001? Infosys also gave the entire 300x because the dot-com crash happened. Which means, so first point is, no matter what the broader market is doing, there's always one sector which is in its own bull market, right? So people say, yeah, market is bad. You don't have to look at the market. You have to look at certain sectors to make money. So first thing is broader, no matter what the broader market is doing, there's always one sector which is in its own bull market. Second point is the name of the sectors will keep on changing. So if you see, the sectors are never repeated, like always there'll be some other sector. Of course, in this 1996 to 2000, there are few companies which have like consistently grown, but bearing them, like most of the time, the names keep on changing. So second point is the every like in the next bull market, the names will keep on changing. And if you don't exit at the right time, the sector leaders again fall the hardest in the bear market. So 1996 to 2000, Infosys went 300x. 2000 on dot-com crash, they fell the most. Amazon fell 90% in that time. So my point is clear, right? So what our goal is? Our goal is to find some patterns between these stocks. Market is all about patterns. So our goal is, I have found out some patterns. I'll discuss that. So our goal is to find some patterns between these stocks and try to replicate the same in the next bull market. So all these stocks, Infosys, Oro, Unitech, had some common patterns between them. So our goal is find those patterns and bet in the next bull market. Is it clear? See, most of the fundamental guys disagree with me. Yes, to find the theme for 2025. Yes, we'll try to do that. But see, most of the fundamental guys disagree. They say, no, a company has fallen 80%, I'll buy it more because it's a value stock. There's nothing right or wrong, but I don't do that because I have backtested my studies and I believe it's better to pay a premium for the stock rather than buying value stocks. What would have happened if you bought Tata Motors when it fell from 600 to 300? You are thinking you are getting a 50% discount. Even if you bought at 300, you are still 80% down. Same with Yes Bank, Edelweiss, and lot of names. This year, like I think 2020, 2019, those who were in the market, they have learned a good lesson on risk management, right? See, a lot of people can disagree on this. It's fine, but it's value investing is not my style, because if you want to do value investing, just come with data and then we can discuss. But I have tested this and I like to be with stocks which are market. See, we don't buy stocks to hold for 20 years and make no money. We buy stocks so that we can sell money. And what is the definition of good stock? Can anyone tell me what is the definition of good stock? What according to you is a good stock? You can type in chat. Consistent growth. Okay. Good ROE. Do you think Maruti is not posting good ROE net margin? Ashutosh. Maruti definitely has a moat. Deepak. For me, a good stock is only which is going up. See, I buy stocks which wants. When I buy stocks, I want them to go up. A stock which is not going up, no matter how good the company is, it's not good for me. So my definition of a good stocks is stocks which go up, right? Yeah, no matter even if the auto sector is down, are you fine with the stock with your portfolio going down 50%? If you bought Bajaj Finance at 5,000, you are down 60% year to date. Did anything change in the company? And a stock like Bajaj Finance, which was the leader for last 10 years, did anything change? So my goal is, first thing, when I buy a stock, I always have a stop loss. No matter how good the fundamentals are, I'll exit if the stock falls below certain price level. That we'll discuss when we discuss the systems. Second is, I like to buy stocks which show the characteristic of market leaders. That also will discuss what are the characteristics of market leaders. So I like to bet on sectors which can lead the bull market. I don't like to buy value stocks, and I like to buy stocks which are going up. Right? Anyone has any questions or want to counter on this? Because generally people counter on this. So everyone agrees. Ashutosh, no is for you agree or not agree. Okay, no question. Okay. Okay, fine. Not agree. Ashutosh, can you unmute yourself? Wait, like let's. Ashutosh, can you unmute? Oh wait, I'll have to unmute. Ashutosh, hello, hello. Ashutosh, I have unmuted you. I just want to hear your point. See, everyone like has different opinion in the market. That's why the market exists. So I want to know what's your point of view. Hello. So where I'm saying that no, don't believe in fundamentals, but I gave you examples, right? I can give you more 100 examples. That's why I say you didn't read the side. Don't rely only on fundamentals. Only is the keyword, not only like just fundamentals. I can give you examples. I have backtested results also. If you just follow fundamentals, a guy who's using something else will definitely make more money. So I'm not saying definitely you have to look at fundamentals. I'll give you some examples also. But I'm saying just fundamentals are not enough. We need to have something else also. Right? Okay. So see, like we'll discuss about the entry point and exit point, everything later. But my goal till now is, see, most people, what happens is they become, when they analyze a company, that no matter, even if it is down 90%, they'll be with the stock forever. A stock, if it's down 90%, you need to make 10,000% return, just 1,000% return just to break even. Right? Yes, risk management is important. Right. Okay. Let's proceed further then. Okay. So where I stop my share. So see, just want to show you this. So this is basically, so we talked about data, right? So that everything should be done with data. So this is our own uh, software which we have built. You can see this. So we track the market, whatever is happening in the market, each and everything you indicator and everything we we do it across different intervals. Uh, we have tried to build a ranking system also, which gives ranks to the system stocks based on things we know. We have built our own backtesting engine, so where we analyze the trades in detail, what's happening, what's not happening. See, if you do this, then only you'll be able to punch huge quantity. So whoever follows me, like they know, like I only trade bank nifty mostly. So I can do like huge number of quantities because I've tested my strategy very thoroughly. So then there are a lot of things which we do. The purpose to show you this is to focus on data management, focus on data analysis. So all the data about the stocks comes here, what is happening with the stock, right? Uh, we are currently working on options tool. We're trying to do something in which you just have to put your view and automatically all the strategies will be created. Jitin, I'm not saying that it is wrong, right? People who have created, but see, you have to, okay, if you do that, I'll just show you a chart of Ramdev Agarwal wealth. I'm not saying, It. I think it's not clear, but the point is, he started with 0, went till 30 crores, came back to 10 crores, 10 to 200 crores, I guess, 200 to again 30. Are you willing to take that drawdown, 200 to 30 crore? That's almost 70-80% drawdown. Are you willing to take that? If yes, then you can buy and hold. But if in buy and hold, even one company goes wrong, so you can check in Motilal's portfolio only. 1%, a lot of companies went wrong. So my perspective is, okay, you definitely can make money in the long term, but you should have an exit strategy. That's what I'm trying to say here. No matter how good the company is. For example, if you invested in Tata Motors 600, it's been 5 years, 4 years, you have lost 80%. If you had invested the same money in FD, your money would have doubled. So the point here is, are you willing to take this drawdown for 7 years, 5 years? Are you willing to do that? Coke fell 60% and it took 13 years to break even. So are you fine that for 20 years you don't make any money? See, all those who made money, they made money in the bull market of Harshad Mehta and all such markets. Till then, after that, we have never seen such a bull market yet. So why not try to make money consistently 15-20% rather than betting on a long-term multi-bagger? No doubt, if we follow system, we can do that also. But see, long-term investing, in fact, is the most difficult thing because you have to endure drawdowns. 200 crore to 30 crore. It's not a small thing. And now also is 60% down. If you can see his latest interview. So if you are ready with such fluctuation in your wealth, you can definitely only buy and hold and don't do anything else. Is it clear? Point is not that fundamentals don't work. Definitely we look at fundamentals, but my goal is, I showed you in the image clearly that the trends change. So why not be with the sector which has the which can lead the next market rather than buying and holding? If you bought Infosys and didn't exit at the peak, after 5 years, in 4 years you saw 300x and net, and after 5 years you are back to zero. Right? Then is it clear or like? See, for example, imagine you were in 2009, right? You bought Reliance at 552. It's been till 2017, which means in 8 years you made zero money. Nothing changed about the company, right? But did you buy Reliance to make no money in 8 years? Which means you should have an exit plan also, right? You could have exited at loss but invested in some other companies. Buy and hold looks easy, but it's actually very difficult to implement in practical. Right? There are a lot of examples also. I'll cover this in very much detail as we go forward. But my only point is that we need to have some systems, no matter even if you're doing investing. So everything should have an exit plan. The webinar should be on stock options trading strategies or stock trading. Everything, like it will cover long-term investing. So basically system trading, long-term investing system, directional systems, theta decay and volatility crush. But before I start, I need to like give you all a perspective and at least cover the basic, because a lot of people approach the markets in a different manner. Ashutosh. Yeah. So Sandeep will come to, we are, so I'm doing that only. But first, I want to give you a perspective why to do it. So now we are coming this. So today we'll discuss basic systems. Tomorrow we'll discuss very advanced systems like volatility crush, time value, theta decay. Okay, fine. Yeah. See, this initial part might be like most of you all might be knowing it, but I want to do it so that, okay, so start then. So we were here till now. I showed you some examples. So this is the budget day analysis for last 10 years. I done this webinar live one day before, live as in like one day before the budget. This strategy is 100% accuracy. I could pinpoint the entry time, exit time, target profit and stop loss in absolute terms just because I backtested it thoroughly. Some of you all might have attended it also. So I could do it because I had backtested it very thoroughly. Just before announcement. Yeah. So we'll discuss this strategy also later on how to trade events. But I'm showing you that I could do this because of data. So the power of data is like, so we'll use these charts also to build long-term systems, option selling systems for monthly income. So this is a result of a strategy which we trade on Wednesday. So we'll discuss this. But the purpose till now is to show you all that we can use data and work around it to build profitable strategies. So like a strategy is even with 100% accuracy, such as how to trade the budget. Most people avoid trading the budget, but we can use it in our advantage. So till now it's clear, right? Why? So basically, it was just very basic. Why to do quantitative trading? Why not just buy and hold? I showed you with data. Our goal is to be the casino. How to reach there? We'll do it slowly, slowly. All clear, fine. So now let's get started. I'll just go through this very quickly, what I'm starting now, because I assume most of you all already know it. But I don't follow classical technical analysis, as in I don't follow patterns such as head and shoulder or such patterns, because I don't think they can be quantified, like they cannot be back tested. You all, if you're following it's working, then it's fine. But I like to work on things which are objective. So I use only certain things from technical analysis which can be quantified. So till now I just gave you a perspective why to do quantitative trading. I showed you what we do, how we back, like what few strategy results. So now going forward, I'll give you some concepts, then we'll discuss some strategies, and as we progress further, the bit complex, like little advanced. Okay. So basically, there's something most of the people in the market talk about trend, right? So in this image, you can see that this red line is defining the trend of this stock, right? Right. So what are the three assumptions of technical analysis? First is history repeats itself. Prices continue to move in trend until the trend reverses, right? Wait a second now. Hello, sorry, yeah. History repeats itself. Prices continue to move in trend until the trend reverses, and everything is there in the price, right? So let's just discuss trend. See, a lot of people talk about the trend. I just run through this quickly. So basically, this graph is in an uptrend. You can clearly see, right? So how do people define up? Price making higher high, higher low is an uptrend. Price making lower high and lower low is a downtrend. And it's sideways if price is within support and resistance. These three trends are only possible, right? This most of you all know. Yeah, yeah, Dow theory, whatever you call it. So yeah. So, but let me ask you one question. What is the trend of this stock? What is the trend? Uptrend, right? Simple. Yeah. What is the trend? Sideways. Downtrend. Okay. Okay. So did you see? Can you see one thing? The stock is the same. Yes. So Ashutosh said it right. The trend is same. Like the stock is same, but the trend is different. So the So when someone asks you the trend, what is the trend? You have to ask them, what is, tell me your time frame. So different time frames can have different trends, and not having a clear understanding of this leads people to make losses in trading. Because what happens is the stock is bullish in their time frame, but it's bearish on a higher time frame, and they try to buy the stock and they lose money. So big money is made when majority time frames align. Which means if you are trading in the daily time frame, so daily time frame, for example, you're trading in the 1 hour, trading in the 1 hour time frame, you want the higher time frame, like the daily time frame, to be in your favor. We'll discuss this more in trading, but the goal is that trend depends on your time frame. So the chart which we discussed of, this is a chart of Asian trend. So just look at the monthly. You can see that it is in a clear uptrend in the monthly chart. Monthly we are using because we are looking at an investing perspective. You can come every time frame, the story is different, but whatever time frame you are trading, you want the higher time frame should be in your same thing only. For example, if I find a stock which is bullish in the daily, I want it to be bullish in the 1 hour time frame also, because the smaller time frame after day is 1 hour. We'll discuss of more of this in trading, but the goal is to show you that your time frame depends, your trend depends on your time frame. And we want, so when we build systems, we want that the majority of the time frame should align if we are trading directionally, right? So now, see, I told you that higher lows is uptrend, but that is also subjective, right? We are talking about quantitative. So what we'll use is only moving averages to define the trend. So moving average, so you can use any moving average. I generally use 20. So if price is about 20, it is bullish. If it is below, it is bearish. We won't use it much, but just to have an overall perspective. If I ask you it is bullish or bearish, you can say, okay, if it is above 20, it is bullish. If it is below 20, it is bearish, right? So we won't use any strategy. A lot of people use moving average crossover and also strategies. They don't work. They don't work, and the results are not that good. I have backtested it. So only thing we'll use about in moving averages to identify the trend. Yes, lagging. It's clearly lagging. Yeah. So what we will use moving averages is for basically to identify the trend. What are some characteristics? So basically, moving averages provide dynamic support and resistance. What are support and resistance? We'll discuss this now in the next slide only. It gives late signals, which means it will give you signal after things happen, but we can use it for to identify the trend, right? So I said moving average provides dynamic support and resistance, right? What are support and resistance? We'll discuss. So you can see this purple line. That means that a 50-day MA greater than 20-day MA, it's uptrend. Yeah, you can say that. But see, we won't use trend to trade the systems. Like we won't use trend to actually trade. If 50 is greater than 20, we'll buy. But we'll use to just an overall perspective. Like, okay, if see what I told you, we want to be with the trend. If the trend is bullish, we'll look for buy signals. We don't look for sell signals, right? Most people do. They try to do everything. They want to buy also, want to sell also. MACDC, my purpose is not to go into indicators. I just want to help you with the trend. What is the overall trend? Objectively, we can decide, because we will be using these concepts to build systems, right? You use 50, 200 mostly. No, I use 20. I use 20 to identify the trend in any time frame. Is it clear? See, what are the rules for uptrend then? So price above any moving average is an uptrend. Moving average you can decide. So if it's 20, above 20, the time frame is uptrend. If it's above 50, it's also uptrend. So you have to decide which moving average you want to use. So I use 20 because I try to exit the trades quickly. So I want to, so 20 will first, if the trend changes, 20 will be the first one to give an exit signal, right? So 200 will be the last. See, systems and all will come. Price return 20-day uptrend. Yes, yes, Sandeep. So don't get into the system building part. That I'll discuss. I'll give you objective rules. Now I just want to give you a what is trend and how do we use it. Like, some people use it in a different manner. So till now the only point is we'll use moving averages to identify the trend, and moving averages provide dynamic support and resistance. So you can see this purple line. Whenever price approaches this level, it bounces back. So which means this purple line is providing a dynamic support. In the recent fall also, the price bounced from the same level, right? So the point was, we'll use moving averages to identify the trend, and moving averages provide dynamic support and resistance. So okay, what is the resistance? Resistance is the point where there is concentration of overhead supply. I'll go through this very quickly. Support is a point where there is concentration of latent demand. But what most people don't understand is the stop loss. So read this very properly. It is that support or resistance which, when breached, has the potential to change the trend of the time frame in which one trades. I'll read this again. It is that support or resistance which, when breached, has the potential to change the trend of the time frame in which one trades. Does it make some sense? I'll show you why. Most people, what they do is not keeping a proper stop loss. Okay, I'll just give you an example of this. Till now, what we understood, okay, what is a trend? Okay, this stock is an uptrend, Asian Paint. I don't know anything else. No, I know only this is an uptrend, which means I want to buy, right? If I buy, I need to have a stop loss. For example, if I bought at this top 1930, okay, what people will do is they'll buy at 1900, keep a stop loss of 50 points below it. Stop loss it, they are out. But the trend is still up, right? So what is most important is keeping a proper stop loss. So what is a stop loss? It is that support or resistance which when breached has the potential to change the trend in your time frame. See, when I'm saying Asian Paint is an uptrend in the monthly chart, which means I want to buy this stock. If I buy this stock, I'll exit only if the trend changes. When will the trend change? In this case, for example, it will change because this purple line is providing support. So whenever it closes below this, I'll exit, right? So if you are buying a stock, it's necessary to keep a proper stop loss. So the stop loss will always be below the support if you are buying. So what most people do, they buy a stock at 100, keep a stop loss at 99, just because uh, uh, that's an affordable stop loss. That's a very, very wrong practice, and I used to do it in the start, and I lost a lot of money due to that. So the first thing in the market is keeping a proper stop loss. You don't have to do chindi-giri. Okay, I'll buy 100, I'll keep a 95 stop loss. So that's why I mentioned in your time frame. Someone would say a 1900 to 1500 is a big stop loss. Yeah, because it's a bigger time frame. Let's go to a smaller time frame. Let's show you this stock. See, for example, whatever the support is, so you will keep a stop loss below that. So if you want to buy this stock, just because it is falling down does not mean you'll exit the stock, because you cannot buy at the so you cannot buy at 100 and expect the price will go up only. It can pull back also. So once you identify the trend, you need to have a logical stop loss, and you'll exit only if the trend changes, right? So that's why you buy in such a quantity that the stop loss is hit. Your loss is defined 1 to 2% of capital. That we'll discuss, but the only point till now is understanding what a stop loss is. Stop loss, well, again I'll repeat, it is that support or resistance which when breached has the potential to change the trend of the time frame in which one trades. See, I trade in the 5-minute time frame. So for me, stop loss could be in Bank Nifty only 100 points. But if you are trading Bank Nifty in the daily time frame, stop loss could be 500 points for you. And both are correct. In my time frame, my trend has changed, but in your time frame, you are still correct. Is it clear? It is very important to understand stop loss, because most of the people have confusion in stop loss and they keep affordable stop loss. You don't have to keep affordable. If you want to keep affordable, so whatever your stop loss is, buy quantity in respect to that. If you wanted to buy 10, buy only one, so that you lose only 1 or 2% of your capital. Is it clear what is the stop loss? How to build strategies on that we'll discuss, but it is very important to understand what a stop loss is. It's the most confusing thing I have found across traders. Now, even good traders, they keep an affordable stop loss. The worst thing to do in the market is to keep an affordable stop loss. So again, read it thoroughly. It is that support or resistance which when breached has the potential to change the trend of the time frame in which one trade. That's why, so till now we covered two concepts. Trend, we found trend depends on your time frame, and stop loss. So I have mentioned the same thing, trend of the time frame in which one trades, right? Okay. So just like quickly, how are support and resistance formed? The first half will be little basic because few people are not, like even new to trading also. But I won't go into details. Okay. So for example, so basically, just put this. This is just to show you, we won't be using it. So basically, what did I discuss? Support is that point where there is demand, resistance is that point where there is supply. Okay. If you see this purple line, when price came here, it came down. Second time it came here, it came down. Third time it came here, it came down. Fourth time it came here, it came down, right? So because it was a resistance zone. Resistance is the point where most people, there's a selling pressure. And if you see this line after this, after the whole thing, the stock used to bounce from that level, 2017-18, right? So what happens is, why is this a support zone? For example, what happens is, for example, LIC India, they have a lot of money to deploy. So what they do is, for example, they have in their mind that they'll buy whenever ITC approaches 260. So the first time it approaches, they buy for 500 crores. Second time they approaches, they again buy for 500 crores. Third time approaches, again 500 crores. But when the last time it approaches, LIC does not have any money to buy. They already bought ITC as much as they wanted. So when the next time it approaches, the price falls. So the 2 points I want to make is, so first thing, what again people do mistake is, support and resistance are zones, not an exact point. So for example, people will say, okay, I'm buying, my stop loss is 105. So you have to keep a stop loss slightly below the support zone or the resistance zone if it's if you are shorting. Why? Because for example, ITC wants to buy LIC wants to buy ITC at 260. It could have happened the price goes to 259, 258 also. Then also they'll buy, right? So support and resistance are zones, not exact point. Price can sometimes shoot up or shoot below also. So it's a zone, not an exact point. Second point is, earlier support acts as resistance and vice versa. Third is, more times the support or resistance tested, weaker it becomes. So let's discuss these 3 points in the chart only. First point, it is a zone, not an exact point. So you can see here, first it was resistance. Third time the price went above it, but still it's a resistance zone. I said it's not a point, it's a zone. So 260 to 265 is a resistance zone for ITC. It was earlier. So first point is, it's a zone, not an exact point, right? Second point was, earlier resistance acts as support. So see, now it was acting as resistance before 2017. Now when the price approached, see, it always used to bounce from these levels. These are monthly charts. That's why you're seeing only one candle, right? The earlier resistance is now acting as support. How are the support resistance formed? Because institutional players have buy orders at these levels and sell orders at the higher levels. So first point was, it's a zone, not exact point. Second, earlier resistance acts as support. The third point, which most people interpret in a different manner, more times the support is tested, the weaker it becomes. Why? I give you an example. LIC has money. It will buy 1 time, 2 time, 3 time, 4 time. Next time they don't have money also to buy ITC. So it will fall. So you can see ITC, this 260 support zone was holding for many years. Once it broke it, just see the fall. Right? So the more time it got tested, the weaker it became, because there was no buying demand for the stock when it approached it for the 5th or 6th time, because all the buying is already been done. So now when it approaches that price, who will lift the stock up if there's no buying money? Stocks move due to buying and selling. If there's some money which moves stocks, right? If there's no money left, who will buy ITC at 260? If already all the demand was already consumed. We won't use this much in strategy building, but you should be aware about it. Is it clear? So we discussed 3 points, that more time it's tested, the weaker it becomes. Earlier support acts as resistance, and there are exact. See, I am only giving you concept. I won't go into detail of support resistance, because I expect you all to know it. And I am just covering points which most people find it confusing and like interpret in a wrong manner. Most people interpret, more time it is tested, the stronger it is. But no, the more time it is tested, the weaker it is. You can think logically also why it will become weaker. So it's a zone, not an exact point. More time it is tested, the weaker it becomes. Earlier support acts as resistance. Clear? Now just, so till now we discussed about trend, support and stop loss. Only 4 points, nothing great. Now just, what is a candlestick pattern? I assume most of you all know candlestick. Please put in the chat, because then I won't discuss only this. I just want to give you one. See, most of the people try to remember names of candlesticks. We don't have to do anything of that. Everyone knows candlestick, right? Yeah, good. Okay, so for us, only two things are important. If we are a buyer, it should be a green candle, or a, if we are a seller, it should be a red candle. That's it. So these patterns are only important. You don't have to remember doji, hammer, maru, bozu. You don't have to remember any patterns. You have to think logically and trade the market. So first thing, in the first image, if we are a buyer, we want this kind of buyers in control, which means the stock opened at the low, closed at day high. This second candle also is something, if you're a buyer, you want to look for such candles. Or the third candle, that there is a rejection and the price goes up. And if you're a seller, you look at the other three candles, right? These are name of candlestick patterns. You don't have to remember any of these. You have to think logically. There are a lot of different patterns, different name. Most of the people trade candlesticks in a very wrong manner. They try to trade each and every candlestick. No, we won't do that. We just have to know who is in control, buyer or seller. That's it. Okay. So till now, just till now, what we understood is, if I want to buy a stock, first thing, the trend should be up, right? If I am a buyer, okay, trend should be up. Second thing, what was second thing? First thing is, you have to decide whether you want to buy the stock or no. You can identify that using a trend. Okay, in my case, 20 is the trend. So I can say, okay, this stock is in an uptrend. First point is an uptrend. Second, which means you want to buy, but where will you buy this? You'll buy at any point. You'll buy here at 1900. Yes, Abhishek is also right. Deepak is also right. Yes. So now coming to the second point. We want to be the casino, right? So we can be the casino only if the risk to reward is in our favor. If I buy the stock at 1900, you can buy, but your stop loss will still be below 1500 or 1400, right? Why? Second point was, stop loss should be logical, not affordable. And what is a stop loss? Stop loss is such a point that when hit changes the trend, right? So if you're buying at 1900, you can buy, but your stop loss will be 500 points. So you'll buy in, if you want to lose 5,000 rupees, you'll buy only 10 stocks, right? But what I said, first thing is trend should be up. We want to buy near support. Why near support? Because the risk to reward is best if you buy near a support. Is it clear? First thing is trend. Second, we want to buy, but where will we buy? We'll buy near a support. So we'll buy whenever it comes near the support, because when it comes near the support, the stop loss is logical, very small stop loss. If you buy at 1500, stop loss is 1400. So my stop loss is small. So, okay, first thing is I've identified using a trend that the stock is in an uptrend, which means I will look only for buy signal. When will I buy? Whenever it approaches support. What is a support? Support, moving average provides dynamic support. Okay, it is approaching the support. Then what else do we need? It comes to support. Will we buy or will look for something else? Support can break also, right? So how do we know we want to buy at the support or no? How do we know we want to buy at the support or no? We should see how strong it is. MA level will act as support. It will act as support, but the trend can change also, right? I'll show you an example. This purple line was acting as support in Bajaj Finance. You bought here. What happened? Gone. Right? Yes. So what is important is, first thing I discuss is trend. So I will look only to buy stocks which are in trend in my time frame. Okay. Second is I like to buy near support. I won't buy anywhere else. If the stock is going up, let it go up. If the risk to reward is in my favor, then only I'll buy. Third thing we discussed is candlestick confirmation, which means at a support, the buyer should have a higher demand, right? So if it's a green candle near support, I'll buy, because now my stop loss is below the candle, right? Because I know that the buyer has come here. Is it clear? Yes. Yes. Clear. Yes, Deepak, right. See, most people try to trade each and every candle. They'll see, okay, hammer bana, I'll buy. No, candlestick is location specific. You cannot trade each and every candle. If you see in this chart, there are a lot of candles. There are a lot of bullish candles also on the upside also, right? Does not mean you buy the stock. You buy the stock only at a specific location. So candlestick should be, bullish candlestick should be formed near support, and uh, bearish should be formed near resistance. Guys, it's very basic stuff, but I have interacted with so many traders and most people find it wrong. And that's the majority reason I found, like, why people cannot make money, because they try to trade each and every candlestick. And most of you all might be doing it also, right? Like, you try to trade each and every candle. If it's going up, I'll try to short it. Yes, position is more important than candle pattern. Yeah. So candlestick pattern should be formed at important locations. Is it clear till now what we discussed? This is basic, but I guess like majority of the people I discuss have doubts, like don't know even such basic concepts also. No matter they have been following systems for like many years also. Is it clear till now? Yes. Is anyone finding it too basic or like able to learn? This is basic, but few concepts I agree like most of y'all might not be knowing also. So just to revise, what we did is, first, trend. Trend will objectively identify using a moving average. Okay, clear. First thing is I want to be with the trend. Second is, if the stock is in uptrend, I want to buy near a support. Okay, second point is clear. But if I buy, my stop loss should be logical, and always remember this definition of stop loss. I won't keep an affordable stop loss. I'll keep a logical stop loss. If the stop loss is not affordable, don't trade. Okay. Important points: zones, not exact point. Earlier support acts as resistance, vice versa. And more time it is tested, the weaker it becomes. Right? But this is not for moving averages. This is for horizontal supports. This third point is for horizontal supports. Because in moving average, the support is not the same point, right? It is dynamic. It will keep changing. This third line is for horizontal supports and resistance. Important point after that was, so we discussed trend, we discussed support, resistance, stop loss, candlesticks. Yes. Sandeep, I'll give you one example also of ITC and HUL. ITC makes more profit than HUL, but it is 50% down. HUL is at 52-week high. So we'll discuss this. So that's what my point is, to use data. We'll discuss this. I'll show you a scanner also, which I have built. So we are building on those only. So we'll discuss like what stocks to invest also, we'll discuss. Right, Sandeep? So that's the point, that no matter even if it's ITC, if it's not, let the market tell you how good the stock is. And good stocks, I said, are stocks which are going up. If it is falling, which means the bad stock, right? The difference between a good company and a good stock. Clear, Sandeep? Yeah. Okay. So then we discuss candlesticks. You don't have to remember any names. Even if you are still using any name, you can forget all the name. Doji, hammer. I don't use any names. You just have to be logical. That's why only trade candlesticks at important locations. You look for a bullish candlestick at support, bearish at resistance. Don't try to be an expert and trade each and every candlestick. Clear? Till now, is it clear? Anyone has any doubts? Okay, all clear. Yeah. Okay, fine. See, before we take a break, I will be doing only basics. After the break, I'll discuss certain systems. Like we'll go into system building. Clear? Okay, let's go forward. So till now we discussed 3-4 points. Now, okay, there's something called as indicators. So indicators we'll use for additional confirmation. So indicators can be derived from price or other factors, but basically indicators are systems in itself only. So we'll see how we use it. So first indicator, I use only two indicators, RSI and ADX, and I'll tell you why also, why only two. First is RSI. I won't go into the calculation or any such things. I just give you some basic point. Not exactly leading. I won't say it's leading, but I'll show you why I use it. So basically it compares the strength of the stock with itself. So RSI is a momentum indicator. Momentum, it will tells you like how fast or how, like what is the momentum of the stock. So RSI has value from 0 to 100. Yeah. What most people say in the market is RSI greater than 70 overbought, less than 30 oversold, which means if RSI is greater than 30, it's overbought. Which means it's too expensive, and RSI less than 30, it's oversold, which is too sold. Like it's just too cheap. We won't use it. We will use in a different manner. For us, this is as an additional confirmation, I said, right? We will use this as an additional confirmation. So if RSI greater than 55, it's a buy. RSI less than 45, it's a sell. Between 45 to 55, there's nothing, it's neutral. Right? So why to use this? Why do we have to use RSI? Yeah, 14 period. See, I'm not going into calculation. Does it? Yeah, I expect you all to know about RSI, right? Everyone knows what RSI is, right? I just will tell you how to use it in a right manner. Everyone knows what RSI is, right? Yeah, okay, good. So now just let me tell you why do we need to use RSI? See, till now what we discussed, okay, trend should be up, support के पास buy करना है, and so the rest of it is favorable, right? But for example, if you bought this stock Reliance year in 2009, for 9 years we did not make any money, right? Stop loss be, it didn't fall also much, but rise, it didn't even rise, right? So we'll use RSI as an additional confirmation that RSI should be greater than 55, which means the stock is in momentum. See, we don't want to buy dead stocks which don't like go sideways for years. So if we run the RSI filter, we'll filter these stocks will be out. So if you can see, this is the RSI mark. So RSI was below 55 in this entire period, right? Yes, kind of Deepak. Yeah. Yes. So we want to be in the fifth gear, right? So that's why we identify the stock is good. We identify everything. But what I said, a good stock is which is going up, which means it should be in momentum. So if RSI is less than 55, and why 55? I back tested, like I saw the pattern between Infosys, Oro Pharma page. I found out that a primary bull market starts when RSI is greater than 55, right? And this is about in the monthly time frame, because now we are talking about investing. This can be applied to any time frame. Is it clear why 55 and why are we using RSI? Because good stocks are which are going up. So if we use this filter, the dead stocks will be filtered out, right? Is it clear? Yes. So the purpose to use RSI, is it good for intraday? Who is Rajesh? Rajesh, for intraday, I use only price action. I don't use any single indicator. What about 30 minutes RSI? I don't like to use it. See, because it's better to use in a higher time frame. I don't use it for intraday. We'll use something else. I'll discuss. Intraday, just focus only on price. Don't focus on indicators. See, intraday trading will come. Don't worry. Now I just want to give you some perspective, like how How we are building on concepts and then we'll directly use it. For intraday, we won't use any single indicator. Volume you can use in intraday. Yeah, volume is good. Yeah, volume you can use. We'll talk about intraday trading. Till now it's clear, right? So we are using RSI because when we buy a stock, it should be in momentum. If we don't use this RSI filter, we'll buy stocks which are good but are not rising, are sideways. So by using this RSI filter, we'll filter those stocks out, right? But one thing what most people do is, and they teach also, like technical analysts. Yeah, I am not a technical analyst, but I use only certain concepts which can be applied to trading. They say that RSI greater than 70 overbought, which means if RSI greater than 70, sell the stock. Most people use this, right? Does anyone use this? Yeah. People say that if RSI greater than 70, short the stock. Right? Anyone uses it? No. Okay. No. So we won't use it. RSI greater than 70 is overbought, agreed. But we won't use it to sell. I'll show you something. So what till now what we discussed? Yes. Yes. Sarvesh is right. Yeah. So first thing, the major bull market and bear market start when the stocks are overbought. Just see this chart of Oro Pharma. This is the RSI. In 2014, the RSI was 70, overbought. It went almost 9x. RSI was always overbought. If you had tried to short the stock, imagine how much money you would have lost. So which means that stocks can remain overbought for years. So RSI greater than 70 does not mean you'll short the stock. Okay, but we'll use it in a different manner to exit our positions. Okay, so the only point I wanted to make here is RSI greater than 50 does not mean that you'll buy and hold the stock. Most people do, and even now you can see like short the stock because RSI is greater than 80, 70. It can remain overbought for years, many years. We don't want to, and majority of the money is made in this period only. So the important point is we'll buy if RSI greater than 55 as an additional confirmation. But if the RSI greater than 17 does not mean we'll short, we'll be with the stock, no matter how high the RSI is. Okay, so what we will do is, thank you, Deepak. So we will use these two things. If RSI moves above 30 after a long time, which means it was below 30 for a long time, then the stock may have bottomed out, hence a case of going long. If RSI moves below 70 after a long time, which means it was above 70 for a long time, and then it comes below 70, then the stock may have topped out, hence a case of we won't short, we'll exit our trade. Is it clear how we will use RSI? So first is we'll buy if RSI is above 55 in our filters, and then we'll exit only if the RSI comes below 70 after being above it for a long time, right? So in the case of this, RSI was above 70, above 70, above 70, above 70, above 70, above 70. See here, in 2016 it came below 70. It came below 70, then we'll be very cautious and exit our positions. We can exit 80%, 50%, but we'll exit the position because RSI again coming below 70, which means the momentum is losing. So you can see what happened to the stock after it was sideways only. So we saved 4 years, our money was saved, right? If we were in the same stock, we would not have made any money, but if we exited the stock, right? We cannot catch the exact top or bottom, but it will give you a good exit, better than a moving average, right? So we won't use moving averages for exits because moving averages are lagging. See, our goal is to make big money also, right? We don't want to buy a stock and exit at 20%, 30%. Till the time the trend is there, we want to be with the trend, but we have to be cautious also. If the RSI is at an alarming level of greater than 70, we'll be cautious, stop loss will be smaller, and we'll exit if RSI starts coming below 70. Is it clear how are we using RSI? See, you all have to unlearn also a lot of things you might be using earlier. So we will use only two things. RSI greater than 55, we'll look to buy. Simple. If it's above 70, let it be. We'll be with the stock. We'll exit only if it starts coming below 70. Right? Same thing in case of shorting. If it's below 30, let it be. We'll exit. If it's, but I'm not talking about shorting because in futures we cannot, like, no one rolls over for such a long time. Right? Clear? Yeah. And whatever I'm discussing from investing perspective, and then we'll go into trading perspective. First, I want to give you a perspective, discuss about. Oh, wait, yeah. Okay, so till now we discussed RSI also. Just keep all the concepts in mind. ADX, the only indicator which we will use after RSI is ADX. So ADX tells you how strong the trend is. So ADX, we will use it if it's greater than 25, the trend is strong. If it is less than 20, it is trendless. So to buy, and I'm telling you, this will be used as confirmation, not as only a sole system, as a confirmation. So it is buy only if ADX greater than 25 and plus DI crosses minus DI. I expect you all to know what is plus DI minus DI. Even if you don't know, it's fine. Just know this. ADX greater than 25 is buy and plus DI should be greater than minus DI. ADX greater than 25 is sell and minus DI greater than plus DI. So see, strong trend can be either on the upside or downside. So ADX greater than 25 is same for both buy and sell, which means the trend is strong. The direction will be by the plus DI minus DI. If plus DI is greater than minus DI, the uptrend is strong. Minus DI greater than plus DI, downtrend is strong. Clear? Yeah. This is average direction index. I have update chart. So if you see here, when my chart is your ADX is the purple line. Oh yeah, kind of Deepak. You see this purple line. ADX was 25 here, right? Which means the trend is strong, trend is strong, trend is strong. It was above 60 also. It's fine. But we won't use ADX to exit. Exit will be based on RSI. But ADX tells you how strong the trend is. Also helps in investing. Is it used to determine the return of time? Not sure on that, Rajarshi. But I use ADX to identify how strong the trend is. That's it. I don't use it. And in trading, how do I use it? If I'm an option seller, if a stock ADX goes about 25, I try to exit the stock. Which means that if I am selling a call and the ADX of that call is going about 25 in my time frame, I'll exit. That's the only thing I use ADX in trading, just to exit my trades. But 5 minutes. Here minus DI greater than minus DI. But see, yeah, but ADX is 22.5 currently. So there's no trend only in this stock currently. I'm talking about the past, 2014. Sandeep. Okay. Yeah. So ADX will use just to identify how strong the trend is. Because see, if you have 20 stocks to invest, you want to be with the stocks which are the strongest trend, right? Clear? Yeah. Okay. So till now we discussed trend, support, resistance, candlesticks, and two indicators, RSI and ADX. Now, how do we use RSI and how do we use ADX? It's clear. Okay. Volume is not much applicable in investing, but we can use slightly in trading. But I don't think like you can like basically the first confirmation is price, but what you can use volumes is, so volume compared to average. If it's more than average, then it gives you additional confirmation. So look at this chart. Increases means compared to an average, 10-day average, 20-day average, any average you can use. I don't use it much. So if price increases, volume increases, which means smart money. Smart money means strong hands are buying. Price increases, but the volume, if you see the rise in Nifty currently was on decreasing volumes, which means the weak hands were buying. Increases, volume increases, which means as the price is decreasing, the volume increases, which means people are shorting more, which means like big players are shorting. But if price stock is falling on lower volume, which means the weak hands are selling. Is it clear? We will use this in trading, not in investing much, but the point is clear, right? VWAP can be used. VWAP can be used in trading. That we'll discuss. Not in investing perspective. Yeah, VWAP you can use. Discuss proper system. But first, I want to give you concept. This is clear, right? Yeah. Okay. So till now we discussed only. So what if Raj only followed a moving average? What would have happened to him? So for his so let's see. Only if Raj followed a moving average, what could have happened to him? So he would have exited the stock when it came here, 313, yes bank, right? Because it was below the moving average. Maruti, he would have exited here somewhere around 8,000, 7,500. Edelweiss exited around 200. Tata Motors also around 450 or something or that levels, right? So the goal is, even if you like have a slight idea of trend, I'm not saying you'll make money, but you'll won't lose much money. But we are using certain other factors to make sure that we build a good system, which I'll show you in some time. So the point is, even if Raj followed a simple moving average strategy, he would have exited from his investments quite earlier, right? Uh, does anyone want any break for 5 minutes, or should I continue? And then we'll directly take a break at 1 only. Continue. Okay, fine. Okay, let's continue on here. We'll take a break at 1. So till now, I didn't discuss any strategies, but till now I gave you concept. So I'll just revise whatever I did till now. So listen carefully to this. So first I showed you examples of Raj, what he did, and that's how most people approach the markets. And it is not wrong. Most people, everyone you know, everyone you ask around, they'll say, okay, they follow the simple strategy. Can we see ADX once more? Example, how to identify the strongest of Nifty ID? Yeah, no, we'll discuss that and when we do examples. Okay. We'll discuss that when we do examples. So we started with the story of Raj. And Raj could be any one of us, and it's generally most of us. Okay, so that a good company does not mean a good stock, which means we need something more than fundamentals to make money. Okay, that was clear. Then we discussed an example of casino. How does casino, just by having a 5% edge, can make money? It is due to a statistical edge, right? So what we want to do is, we want to be the casino if we want to make consistent money. How can we be the casino? Is by having a system which has an edge, and we trade the system every time, which means, I said law of large numbers, which means you can lose 2, 3, 4, 5 times in a row, but you have to trade the system n number of times to make sure whether it's making money or no. And how do we know that a system has an edge? Is by back testing. Clear? Then we discuss basic concepts of trend. What is a trend? How to objectively identify? You can objectively identify using a moving average. Then we discuss support, resistance, and stop loss. Stop loss, I gave you a different perspective, and always keep that in mind. Though it should not be affordable, it should be logical. Then we discussed 3-4 points regarding supports. More time it is tested, weaker it becomes. That's for horizontal supports, not for moving averages. Supports are zones and not exact points, and earlier supports acts as resistance. That was clear. So we identified that too. When we'll buy a stock which is an uptrend, but we'll buy at support. How do we know it's we buy at support? Is by candlestick confirmation. Okay, so these three things were clear. Then, but it could have happened that stock does not move only if we buy. So we use RSI to gauge for momentum. But in RSI, don't do the mistake of shorting if it's above 70, because stocks can remain overbought for years. If you see the 1929 stock chart, the major falls in the markets, major crashes, all start below RSI 30. Right? In the current fall also, Nifty went till, I guess, RSI 15. So it does not mean that if RSI below 30, you'll buy. Right? You'll be cautious if you're shorting, but you'll be with the trend and you'll exit. If you're buying, you'll exit if the RSI is above 70 for a long time. And if it comes below, you'll exit because the majority of the move is over. Same on the shorting side. If it's below 30 and comes above, you'll try to exit. So we'll use only two things. RSI greater than 55 will buy. If it's above 70 for a long time, it's coming down, we'll try to exit. Then we saw about ADX. So ADX will use only to see the strength of the trend. As someone said, which gear the car is. So if it's about 25 and plus DI and minus DI, we'll look for buy. If it's greater than plus 25 and minus DI greater than plus DI, sell. So that's it till we covered till now. Very much basic, but very much important. It's clear, right, till now? Yes, okay, fine. So now that comes to another important point, which is important to make money in the market, is compounding. I assume everyone knows what compounding is. So see, for example, if you invest 10,000 for 20 years, and you compound your wealth for 50, this is 1.4 crores. This all is possible due to compounding. So that brings to another important point, that to make money in the markets, we need to compound our wealth, right? So what all factors are important in compounding? CAGR, basically compounded annual growth rate. So CAGR is the most important factor in wealth creation. So higher the CAGR, faster the wealth creation, which means Warren Buffett took 80 years, I think not 60 years to become a billionaire. But Jim Simmons could do it only in 10 to 15 years. Why? Because Jim Simmons CAGR is 66%. Warren Buffett is only 18 to 20%. So higher the CAGR, faster the wealth creation. So CAGR depends on 2 points. First is how much does the price move and in how much time. Price should also move, but it should move quickly also. So how can we achieve high CAGR? First is buy right stocks. How do we buy right stocks? We buy stocks which are in uptrend, which we know how to identify an uptrend, right? Buy at the right time, beginning of new uptrend. So that also can be figured out by buying near a support. But that is not always possible, but yes, that we can do. Third is about non-performing stocks, save time and capital. I showed you an example of Reliance. Did not move for 9 years, but that we can avoid if we apply RSI filter, right? Exit at right time, rotate capital to new trends. How do we exit? Is exit by RSI is coming below 70, we'll exit. See, because stocks, those, so for example, yes, maintaining a high CAGR with capital is difficult. Yeah, so even a 20% CAGR is moderate. It's a good CAGR to aim for. Yeah, so yeah, as your capital will increase, maintaining the high CAGR becomes extremely difficult. Yes, but I am giving you points like which can help us achieve high CAGR, and the systems I have built have keeping those in mind. To buy right stocks. So most people, so for example, if you buy a stock like Tata Motors and it does not move, so basically you bought the wrong stock only for 6 years. You didn't only lose 90%, you lost more than that, because if you invested the money in a FD, doubled, right? We can abort non-performing stocks by using the RSI filter, and we need to exit also at that, like you cannot exit at right time, like you cannot catch the top, but you'll exit at slightly lower levels, but it's important to exit also. Because I told you like Infosys in after the .com crash, it again came to the same levels after a 300x rally. Clear? So right stocks we can use using moving averages, abort non-performing using RSI, exit at right time if RSI starts coming below this, right? Yeah. So this is for trading, which we'll discuss. So if you want to trade, first, if you want to trade in a bullish side, the trend should be upwards. Price should be near support. There should be candlestick confirmation or certain intraday patterns, which we will discuss. This fourth point you can use or not use. It's good. It's up to you. Then we'll use OI data and futures data as an additional. This is for trading. But that's why I gave so much time to support resistance candlestick. Keep this in mind when we come to trading. We'll discuss this, how to do this. Like how will we analyze stocks on basis of these parameters. So till now for investing, what is the checklist? Trend should be upwards. Okay. Price should be near support. Okay. Bullish candlestick pattern. Volumes not required. Indicator should confirm, and other data points. So other data points could be anything. For example, certain people find out that if the temperature increases, Volta sales increase and Volta stock price increase. So it could be any other data points. So if you had seen my Just Dial trade, I took that trade based on Alexa ranking. So other data points could be anything, right? So now whatever we discussed, just let's see how does it look. Uh, Can RSI ADX be used for swing trading? No, I don't use it. But you can, yeah, you can. Okay, so till now what we discussed, it's just a filter based on that. First was, so this is the investing system. This is the first system which we are talking about. How to like invest for the long term using systems. So first, and investing, that's why the time frame is monthly. So what was the first thing? The trend should be up. So the monthly close should be greater than monthly 20 moving average, right? Which means we find stocks which are in uptrend. Monthly RSI should be greater than 55. Why 55? Because I found out that primary bull market starts at 55. So using this, we are with stocks which are in momentum. Then another filter which filters out the stock which are strong, right? But ADA greater than 25 plus DI should also be greater than minus DI. Okay, and this 1000 is 1000 crores. Why? To filter out stocks which are bad. So then it's a free site. I'll give you share the screen. If you in this market there are 49 stocks, right? So for example, let's open any one of it. You see the stock. Nifty is down, I guess 30-40%. See this stock almost at 52-week high, and it was always in a strong trend, right? There are many stocks. Let's see. So about India, see, strong uptrend, very strong, I would say, because it didn't even retrace to the 20 moving average. It's at 52-week high. I said like luck is not important. Market is down, but this stock is at new high. heavy slab, new high. HUL still in uptrend. See, even if it's making a bearish candlestick pattern, will you short it here? No, because we will exit the trade only if it closes below 1700 or like the previous low. So if it comes here, we won't buy HUL here. If it comes here, we can again buy, right? So there are like other stocks also. Yeah, Asian clear uptrend. It came also here, again bounce back. Is this clear? You can see where Nifty is and where these stocks are, and these are familiar names. Other name HUL there, Asian Paint, Divis, all are familiar names. I'm not saying you cannot go wrong, but these stocks, Asian Paint is in a multi-bagger uptrend since 2009. Definitely should have been. HUL also similar thing. See, Divis, pharma stocks, if you trade have in your portfolio, you have to see like you have to trade the volatility also. These stocks can also pharma stocks for a risk averse investor won't be recommended. You can keep a lower weightage. So see, in spite of the market of all this is to just to show you that there are other names also, right? Like a lot of different names, right? So goal to show you this. This is a company I don't even know what it's doing, but this it just doubled in 1 month. Last month it was 1824. Now it's at 4,000. I don't know what the company is doing. GMMP float. I don't know what. How do you even pronounce it? So goal to show this is okay. Use fundamentals fine, but let the stock market tell you the stock is good, and the stock is good only if it is hitting new highs or such thing. If you run this filter, you'll only find stocks which are at new highs or Ruchi Soya. I cannot say because Ruchi Soya I say it's operator based. It has almost you cannot trade only. It's in circuit every day. This is a different Ruchi Soya. What is the which what is the name of the stock? What is the script name? See, Ruchi Soya is. I'll just check in this. Ruchi. No, it's not Ruchi. Wait. Just look at this chart. Okay, Ruchi only. This stock from 17 rupees in 1 year, it's at 413. But this we cannot because see some stocks can be operator driven also. So it's hitting the circuit every day. So there was similar company which was doing agro cargo force. See this company went from 19 to 150, came back to again 10. So these are operator driven companies. Okay. In BSC, I guess, and Patanjali impact, so we can be use operator driven in other data. See, anyways you cannot invest because it's hitting upper circuit every day. But I don't like to invest in such companies. Like what has fundamentally changed that the company has become 60x in just 2 months. Okay. Yeah. Wait. Yeah, so yeah. So we ran this filter to filter out stocks. So this is our first system based on investing. But there's one more thing you can do on this is in first point monthly close means close price of previous month or what is it? No, current month. So current month. If current data is not there, it will use the previous month. Right? See, I am using monthly because we are talking about investment. So this is the first system which we discussed, which is based on investments, right? But this is purely based on only on price. We haven't considered any fundamentals. So what you can do is, I won't teach you fundamentals, but you can apply fundamentals on the similar things. So there's a person called Dr. Vijay Malik. I think he's the best guy for fundamental investing. I like I like to follow him. You can just get his book. Uh, I think it's for 2,000 rupees only. Peaceful investing. Just go through that book and use the filter. I'll just show you what filter we use. So this is what we do is whenever stocks comes in our radar, we do a analysis based on the fundamentals. After it is, so we'll analyze stocks only which are in the this shortlisted set of stocks, and then we do the fundamental analysis. Fundamental, I'm not teaching you, just giving you a starting point. You can read the book. I'll just show you the checklist which we follow. This is inspired by Vijay Malik only. So these all factors should be there to make sure that the company is investable. So first thing, the first starting point is the system. Second, confirmation comes from fundamentals. If the stock does not fall, see, you already have 40 stocks, right? We want to invest only in 10. So you can find the best 10. So these are certain things which the most important is the eighth point, cumulative profit after tax versus CFO, which means the company is able to collect the profit and cash flows. So the profit is different, collecting the cash flow is different. So it should be almost equal. Uh, there's another important point, which is SSGR, self-sustainable sales growth, which I cannot explain now. But if you read this book, it's a very important concept, and I think this will filter out all the bad companies. So I thought this filter will always tell you. So these are certain things which we follow. Valuation, I don't give much importance. If you see, that's why it's red, because I don't believe in the valuation part. Then you can do the business and industry. Then you do the management. You see if the management is, you can make money only if the promoter of the company wants you to make the money. If he is a fraud, you cannot make money, no matter how good the company is. So there are certain parameters which we follow. And on the basis of that, so credit rating, everything, on the basis of that, we decide whether to invest in the company or no. So I'll just show you one thing. Right, so how does it help? Is it clear till now? The system is clear, right? The investing. Now, April closing price with the 20 MA. Yes, Sandeep. So if you run that screener, all the stocks will automatically come. So till now we discussed only one system, which is of using price and system. Do we need to? No. For that link, you don't need to have. I'll give you the link. I'll share the link. You can just do that. But see, there are 45 companies. You have to filter out the best 10 companies which come in the system can be fraud also. I'll give you an example on that only. Yeah, I'll share the link after this. I'll share the link. Don't worry. So this is one company which we were discussing. it's Hirect, right? So I just want to show you it came in our system, which means the company was following all the criteria, ADX, RSI, trend, right? But what happened if we did the fundamental analysis? What we found out, I'll just show you. First is the SSGR has been negative, which means the company cannot grow on its profits. It has to take debt to grow. A very big negative sign. Free cash flow is also negative, which is also a very bad sign. So it's mentioned it's a very poor sign for a long-term investor. Management is giving loans to other companies, which means it's not doing his business, but taking the money and giving loans to other companies, which is a very, like, it's a red sign for us. So if you see this checklist, everything is red, right? Sales growth is slightly varying, debt to equity is there, right? So what is it? Hirect is not a very good stock to invest. It fails on a number of financial parameters. Yeah, I am not saying Ashutosh's valuation is not right, but I am of the opinion that I first like to follow my systems and then decide whether to invest or not. So I won't invest. So I'm not saying I don't like to buy. So if it's in my system and the valuation is decent or like everything is fine, then I like to invest. So I gave you the example of Hirect now, right? So I'll just show you one thing. So Hirect was in our system, right? But after doing fundamental analysis, we found out the stock is bad. See what happened. It was around this level in January, I guess. We analyzed this. It was 238. It was everything was as per our system, but we did not even consider it. Why? Because it was doing short. Just see the stock has collapsed almost 60%. So I am saying fundamentals use as a second checklist. I'm not saying don't use fundamentals. I won't teach you fundamentals. You can refer to Vijay Malik's book. It's a very good book. I think worth the price. So is it clear, right? So I'm not saying don't do fundamentals. First thing is systems and then come to price, then come to fundamentals. Clear? All known names are there. Asian Paints is there. Okay. Yeah. And some I had given a view on Bajaj Finance also. I can go wrong also on this. But why did I say that the Bajaj Finance will underperform? And it is already underperformed compared to the stocks, our portfolio stocks. Why? It has broken a monthly, like this trend has been broken, right? And already it was trading at 10x book value. So I feel it could underperform, and underperform does not mean it will fall, which means there are better opportunities than Bajaj Finance in the market currently. Clear? See, if it was a true leader, it should have behaved like Asian Paint. It should have behaved like HUL, right? Is it clear? So that's why don't love your stocks. Like if you are wrong, exit. There are always new opportunities, right? So what? So till now we discussed only one system. So what I want is RSI. Yeah, RSI 55. Yeah. So but see, if you see here only it would have given us a caution sign that RSI was greater than 60. We would have exited here, right? It was as buy always above 70. See, but we could have started exiting. Yeah. So the only point I want to make is I'm not saying don't do fundamentals, but I've observed so many examples, back tested so many things that first thing is follow systems, and the system which we have built, we have tried to incorporate as many things as we can. We are with the trend. We are trying to buy near support. We are trying to abort like filter out stocks which are not performing, trying to like using RSI and even ADX. So out of those lists, you will get many lists. Do fundamental analysis on that, and then try to decide. So you can do fundamentals. Screeners also you can run on screener.in. There's a site called screener.in. You can run fundamental screeners. The I cannot teach fundamentals. So the goal is once the stocks are in a system, do the fundamental analysis, and then does not mean that you invest all your money in one stock. You have to build a portfolio because you can go wrong no matter how much analysis you do. Okay, it's clear right till now, or anyone still believes like that's why I say fundamentals use as a I showed you in Hirect, right, how fundamental could identify that the stock is bad. So definitely fundamentals useful, but use a second filter after your system says it's a buy. Use a filter. So if you see the stocks which are in this list, just go and check how they have performed in the last 3 months. They definitely outperform the market. Nifty is down, which means you don't need any luck to make money. Is it clear for everyone? And everyone is clear, like that point I was trying to make from the start. Okay. Okay. So till now also, like we discussed, like very basic stuff. So after the break only we'll discuss strategies. So now let's come to give me a second. Wait a second, guys. I'm trying to open the PDF. Yeah. Sorry. Yes. So till now we discussed only one investing system. Okay. And we can use fundamentals for that also as a second filter. So now let's come to the second important point, backtesting. And after this backtesting, after the break, we'll start discussing systems. So I'll just give you an overview of what backtesting is and how you can do it. So how do you build system? So first thing in system building is hypothesis. So what is a hypothesis? For example, if you feel that a stock crosses previous day high, it can go up. So this is your hypothesis, which means if the stock crosses previous day high, I buy. Or it could be anything. For example, some people say Nifty P is below 14, I would like to buy the stocks. Okay, so hypothesis is Nifty P is below 14, buy to the top 10 stocks in Nifty. So hypothesis could be anything, right? It's basically based on your market observations, how you observe the markets, and you think if this happens, then this happens. So hypothesis could be anything. So once you have your hypothesis, then what you do is you specify the rules. For example, in this case, if P is less than 14, I'll buy. So this is your rule. Try buy stocks which is P less than 14. But how will you exit is if P is less than 14, I'll buy. I'll exit if the P goes below 10. So you're buying if the P is between 10 to 14, you'll exit if the P is less than 10. It could be anything. I just trying to give you a perspective how backtesting is done. So first a hypothesis is formed, then you specify the rules because the system should understand the you're doing in Excel. Then you backtest, you get a result. Okay. So once you backtesting is done, there's something called as walk forward testing. So what is walk forward testing is, for example, if you test a strategy for example, from 2000 to 2015, suppose you're in 2015, you test the strategy for 5 years, 15 years. So now the 2016 data is the new data for the strategy because you tested for 15 years, but 2016 is the new data. So in walk forward testing, what we do is we start to give new data to the system along with the past data. So for example, you have data for last 15 years. Okay, so you are in, for example, assume you are in 2020, you have data for last 20 years. So you test for 2000 to 2005. And in 2005, what will you do? The 2006 and 2007 data will be new data for the strategy. So what you'll do is from 2002 to 2007, the range is 5 years, but you want the strategy. So the 2-year data is a new year data, 6 and 7, and the less 3 years data is the past data. The 2-year data is the new data for the strategy. So using this, the system, you want that the performance should be similar even if the new data comes, because when we are back testing, we want that as soon as the new data comes, the performance is also similar. So walk forward testing is an advanced concept. I think you all can do it, but you need to know Python for it. But even if you don't know, it's fine. Like, it's a very pretty advanced concept, but the concept is you start to give new data for the system. For example, what most people do, you backtest for 10 years and you trade for next 5 years. No, if you're backtesting for 10 years, the new 2-year data you'll give to the system and see if the performance is similar or no. Once this is done, then we actually live trade, but with a small capital, to see are we getting the same results as we want. And as we live trade, we get some feedback and we improvise the trades, right? So which means your hypothesis keeps on improving. I'll just share an Excel and then we'll discuss this in detail. I'm sharing the link, just open it. It's in view mode. Now let's discuss backtesting in slight detail. Just click on the link here. Or even if you don't click, you can see my screen. Okay. So the first thing we discussed in backtesting is having an idea about the strategy. What is your strategy? The strategy comes from market observations and whatever your hypothesis is. For example, it could be, so we will be discussing a system that R1 system, like I discussed it. So my hypothesis is buy above candle closes above R1 in 10 minutes, right? This is my hypothesis. Okay, this is my hypothesis because I observed that stocks generally perform well if they close above R1. This is what I think. I don't know whether it's true or no. This is what I think because I have observed, for example, like last 5-10 days, I think these stocks perform well. Okay, then what I do is I want to backtest it, right? So a backtest is entry logic. So what is my entry logic? Same, buy if candle, buy if close greater than R1. I'm just giving an example to make you understand. Okay, this is okay. If you're buying, what is your stop loss? So in this case, I'll keep a stop loss below candle low, which closes above R1. Right? What is the exit logic? So exit if stop loss hit or at 315. Okay. This is the logic. Then how much to buy? For example, if you have right. So for example, suppose you have 1 lakh rupee. See, as a trader, we'll discuss this detail in risk management. Your risk per trade should be fixed, no matter how good the setup looks to you. So suppose you decide that you will risk 1% of your equity on every trade, which means if you have 1 lakh capital, your risk per trade is 2,000 rupees, right? So how much stocks will you buy? For example, if you already know the stop loss and targets. For example, the stock price is 100, the stop loss is 95. So how much will you buy? 2,000 by 5, 400 stocks, right? Is it clear till now? Everyone? Okay. Yeah. So see, this is how you have to think if you want to become a system trader. So how did I come up with like, for example, this long-term investing system? I observed, yeah, why did Infosys went 300x? Why did Oro Pharma went 70x? Why did this company went 100x? Are there some common patterns? Okay, let's observe. Okay, I found out RSI greater than 55. Good. I found out, okay, trend is also there. Okay. I found out, but certain stocks don't move for years. Okay, let's add a RSI filter. So you will keep building on your strategies to come up with a final conclusion, right? So that's how you think. You can add your more observations with time. So first is strategy idea, whatever you observe in the markets. Okay, people say अच्छा लगता है, it's not important. How does it, what are the backtest results, that is important. Okay, I candle which closes above R1 is good. Okay, because I observed intraday patterns and I found intraday stocks which were top gainers, I found out they all closed above R1. This is what I found out. Okay, so let's test it. What is I need to write some logic. Okay, what is the logic? Buy if it closes above R1. Simple. Computer can understand. What is the stop loss? Stop loss below candle low. Simple. What is the exit logic? Exit if stop loss hit or 315 or 350. This is also I mentioned. Then the important point is risk per trade, and this will decide whether your system, if you screw up here, you lose a lot of money. So this is also very important. So risk per trade is 1%. You can give it 2% also depending on your risk appetite. But according to the risk appetite, you will buy. For example, if your stop loss is smaller, for example, more stocks, you'll buy 2,000 stocks, right? So if you see in back testing, only the end logic will change, and even this, if your strategy is dynamic, but only these 3 points will change. Rest everything in back testing remains same, right? Which means the strategy will keep changing, but the way to evaluate is the same. The entry logic can change as per strategy, exit logic can change, stop loss can change as per strategy. For example, let me give you another system also. Okay, I trade intraday strangles. Okay, what is the entry logic? Short straddle. Okay, short straddle at 920. Okay, this is the entry logic. What is the stop loss logic? 20% of the combined premium. Okay, exit logic, stop loss hit, or if you get 20% of the decay. Okay, risk same, positioning same. So you see, system is same. The back testing framework is same. Only the entry logic, exit logic will keep on changing, right? So till now, is having a strategy idea, but strategy idea is you should test it. So for testing, you this will discuss in later in detail in risk management, money management. But this is what will make or break your strategy. Position sizing and risk management. Position sizing and risk per trade. Okay, now this is done. Now what? Now strategy, right? Then ways to evaluate, which we'll discuss now. Then we'll see what is the performance in different market conditions. Okay, okay, this is done. Then we optimize the strategy. For example, how can we optimize the strategy? We can optimize the strategy. For example, the strategy. Hello. Yeah. For example, for example, in this only strategy, how can I optimize? So what I'll do is I have the backtest report. So what happens is sometimes the stock went, for example, if I buy Bank Nifty, it went 500 points in favor, but I'm exiting at 315, right? It comes and hits my stop loss at 3 p.m. Okay, so I can optimize by, if I'm getting 200 points, move the stop loss to cost. So there are a lot of different ways to optimize. We run our optimization algorithms, but we try to optimize the strategy. Optimization, which like what will give better results, right? So optimization is done by analyzing the losses and the profits. So I analyze the losses. Okay, I found out if I create a triangle after 2:30 p.m., it's a loss. If I do directional trading after 11:30, I make a loss because till 11:30 the momentum is lost. Is it clear like how I'm thinking? I'm just giving you a perspective like how to do. When you do, you can do it on your own, but you have to optimize the strategy. Clear? Then you evaluate the robustness. Robustness, like does it make money in all market conditions? Like what is the strategy like? Like what are the favorable conditions for the strategy? Then we track the real time. So suppose you test it, does not mean you go all in for 1-2 months. It's in a pilot mode. You test with 1 lot, 2 lot. If you see, I most of the time I post on Twitter trying a new system, testing with 1 lot, 2 lots. You will try to see what is it doing. Okay, and then there's something how to know the strategy has stopped working, that we'll discuss. So till now this is clear. Then I'll move to the next. See, I won't teach you Python, but I'm giving you a framework which you can use to test your strategies, right? Hello. If this is clear, I'll move to the next. Okay. Okay. So we discussed this. So now there are certain important points in backtesting. First is the distribution of trades. Like how are the trades distributed? For example, wait, I'll share a backtest report only. Wait. Give me 1 second. Two minutes, huh, guys? Yeah. So see, I gave you a concept of backtesting. Then I said other important points are distribution of trades, which means how are the trades distributed? Like for example, so if you see that this is distribution of trades, like how did it make how does it perform every month, every year? Why this is important? Because for example, even if you're a good trader, if you suffer back to back 3 months, for 3 months you don't make any money, you'll stop trading the system, right? So you want a system in which the wins and losses are evenly distributed. So if you are back to back 20 losses, you'll stop trading the system. So you want a system, for example, this system is decent because it is making money every year, and like you are motivated to trade the system. But if it could have happened that Biases we'll discuss. So it could have happened that if you're making back-to-back 5 losses, 6 losses, for example, from Jan to July, if you don't make any money, you won't trade in August only. No matter even the system is good, right? So this distribution of trade is very important, so that it should suit your psychology. So distribution of trade. If we backtest for n months, then we can trade for n by 3 months. It's a rule. So for example, if you test for 10 years, you can trade for 3 years without tweaking much in the system, right? Then we check the performance on black swan event days. Black swan, whether in our days where market moved heavily on either side. So we want to see how did the strategy do on that day. For example, if you're doing an option selling strategy, one black swan event can take 20 years of profits. So you want to see how is your strategy doing on black swan days. Then what we do is you check the performance by removing the outliers. For example, if you are doing a strategy, it does not make money for 99 trades, and in one trade you get 100x. So you will think the strategy is very good because it gave you good money. But if you remove just one trade, the system is not doing good. So you remove the outliers. So what we do is we remove the top 5% of the wins and top 5% of the losses, and then see what is the performance. Other important points are the trades evenly distributed? Evenly as in the same thing, like profit and losses are even. Like it does not, there are back-to-back 10 losing streaks, so that you won't be able to trade if there are so many losing streaks. Consistent performance from quarter by quarter, because that's helps your psychology. PNL also evenly distributed and acceptable performance, wide range of markets. It's not like it works only. It could be certain system which work only in specific market conditions, but it should be give a acceptable performance in the markets you trade. In positive experience, net you should make money. Is it clear till now? Yes. Okay. So yeah. So when we put a logic, what happens is back testing. What you do, you go candle by candle and note, right? And what happened to the individual trade. For example, you can see 250. For example, buy value in 3 p.m. It's a smaller time frame strategy. So if you do this every trade, there will be some profit loss, right? Every trade will give you some profit or loss. So on these profit and loss, so what in a backtest engine you have entry logic, exit logic. So these trade is generated using the entry and exit logic. But based on the PNL, we can decide whether we want to, whether the strategy is good or not. So, oh no, yes. So first, whatever type of strategy is, what instruments you want to trade, what time frame you want to trade, what is the starting capital you are trading with, entry logic, exit logic we discussed. Target could be in some strategies, in some strategy you can even trade. What is the risk you want to take? What is the leverage you are taking? Right? If you do this, this is the equity curve. This equity curve is basically the cumulative profit and loss, which means if you started with 10 lakhs, how much money did you make if you followed the strategy? Right? This is generated based on the PNL column. So yeah, so now these are the terms which are important when analyzing system. What is starting equity? What is the ending equity? How much profit you made? Simple, I no need to explain. What is the CAGR? Total trades, profitable trades. What is the average profit you make? What is the average loss you make? Payoff ratio. So these are terms I think not important now. What is the largest win, average win, or largest loss? What is the max consecutive wins, max consecutive losses? Like back to back 8 losses can happen or no? What is the drawdown? Sharp ratio. So this I don't want to go in detail in now because I'm just giving you a perspective. In the further Python classes, we'll go in detail. But for those who have joined for trading, I think this is not important. But it is important like what back testing is. right? Because, and then the additional factors which we looked at, and then we decide whether the strategy is we want to trade or no. Is it clear? Yeah. And those who join only for the trading thing, I'll share this Excel, like you can figure out on your own. But I think like if you're joined only for trading, I think going into the detail of this won't help. We'll do this in the Python classes only later. But you got an idea, right? If you want to backtest your strategy, and if you want to do it manually, what you'll do is you'll go, you'll have to, it will take some time. You have to note each and every trade, note what is the PNL for each and every trade, then see how did your money grow, follow the strategy. What if you remove the outliers, like the top 5% win, top 5% losses? What is the average profit you make? What is the average loss you make? How many back-to-back wins are there? How many back-to-back losses are there? Right? Is it clear, or like the trading people want to go more into the detail of backtesting? Because see, I think I've given you an overview and you can pretty much figure out on your own. Right? Okay, yeah. So when you do back testing, so you have to keep all these things in mind. So when you are back testing your strategy, first thing is have an idea, whatever your idea could be. Then what is the entry logic? What is the exit logic? Stop loss? How much will you risk? How much will you bet on each trade? Okay, if you do this, you will get a lot of number of trades. What you'll do is from the trades, you'll see what is the back to back, what is the net profit you made, percentage winning of your trade. There are certain terms. I'll share with this. These are self-explanatory. I don't think. If you can talk about where to backtest the strategies historically. Jitin, see, we code for the strategy and it is backtested across all. What you can do is I found out this called stock mock. I haven't explored it much. So this is a site where you can try to backtest your strategies, right? This is there. You can just log in and check this. But I back. Jitin, yeah, it's pretty useful, but now it's expensive. What is expensive? Stock mock, you are saying, Deepak? Yeah. So I don't use stock mock. So as I showed you, right, I have built my own engine. You can see this. But see, this is for a tech background. You can backtest manually also. It's not that. So we have to build our own. So we just have to change the strategy code and everything is calculated automatically. Right? But this is only for our own internal use. So, yeah, Pushpendra, we use Python to extensively backtest a strategy. So even if you don't know Python, like see few people, I think 7 or 8, I have joined only for the trading class. It's fine. So for you, a starting point would be don't go if you don't know Python. It's fine. What you can do is you have the data, right? So data, first of all, okay. See, EOD data is freely available on NSC. You can download that. But if your strategy is in a smaller time frame, for example, smaller than a daily data, that data is you have to purchase it. There's no other way for it. But if you want to test it, it's worth if you purchase and test your strategies. So how do you test it? I gave you a framework. You have your entry logic, stop loss logic, exit logic. Even if you don't know Python, you can go bar by bar and note whenever the condition is met and exit whenever the condition is met. You get a series of, you will generate a series, a trade log like this. What you have to do is you have to see what is the cumulative profit, right? Then you can calculate something like this backtest report, like what is the total number of trades, what is the profit, number of profitable trades, number of losing trades, max winning streak, like how back to back losses. So example, in this max losing streak is 9, which means back to back 9 losses were there, right? What is the drawdown, what is the run up? I don't want to go into detail of this because I think that is more suitable for someone from a tech perspective, right? Our goal for this webinar is to more on the strategy side, right? So I will only show you strategies that are already back tested, right? So those who are joined for trading, is it fine, right? Like, should I move forward, or like you want to go into detail of this? Because even if I go into detail, application part would be difficult from your side, because you need the data, you need to know Python, right? But I gave you a framework. Even if you don't know Python, you can do bar by bar. A lot of people do it, but it is time consuming, but you can do it, right? Jitin and others who joined only for this, can you just confirm, like, is it fine? Like, do you get an idea what back testing is and how to do it? Ashutosh, you also? Okay, fine. Yeah, see, I don't want to delve more into this. Have used Amy Broker for back? Yeah, I don't use Amy Broker. So those who join for the trading class, I don't want to go more into this. This is something like which is like I cover it more in more detail, but it's Python is required. So for today's and tomorrow's session, this is not the goal for it. But I think this is a clear, and it gives you a good starting point if you want to manually do also. Now, whatever strategy you're doing, you can manually do this, right? You can manually go step by step. It will take time, but you will get a good perspective and a good idea what your strategy is actually doing, right? Okay, fine. Yeah. So yeah, so we were here. So first thing, important point is hypothesis. Having a hypothesis, you specify the rules, you back test, you walk forward test, then you live trade with small capital, and you get feedback and you start improvising. This just these are the important points in. This also I discussed in the Excel sheet. Same thing I pasted here. Distribution of trades is important. See, if you trade a system, but if the distribution, for example, many losses and then positive trades. So when you trade a system, it should suit your psychology. For example, if a system which is a drawdown 20% and you are a risk averse in trader, you don't want to take that risk. You should not trade that system. You should trade a system which suits your psychology. Fine. Then if we backtest for n months, then we can trade for n by 3. Check performance on black swan days. Check performance by removing the outliers. See, are the trades evenly distributed? Are you making consistent money? It is time consuming, no doubt, but that's making money is not easy, right? You have to give some efforts. Is the performance acceptable in wide range of markets? Positive expectancy, which means after series of trades, do you make money or no? This is the distribution trades which we discussed. These are the back testing things which are important in the back test report. These most of the things are self-explanatory. I'll share an Excel. I think in that I have mentioned what each and every term means also. So see, this is the backtest report for a system for Bank Nifty. If you create a straddle open, when opening is between previous day low and previous day high and exit at close, you see the equity curve is good, but you see there are back-to-back 6 losing trades also. But how is this system making money? Because the average win is greater than the average loss. The accuracy is also not that great, right? See, total, I think 500, 600 trade, winning trades only 325, losing 184. So which means there are losers. We'll make losses also, but overall it is making money because the system has a positive expectancy, right? Is this clear? Yes. So what most people do is judge a system based on winning accuracy. That is the worst mistake to do. You should not judge a system based on the accuracy. you'll never find systems with like, there are very few systems with more than 90% accuracy, like very few, and the trades are very rare. So for example, the budget system has 100% accuracy, but you get only one trade a year. So very few systems have like very good. So don't run for accuracy. Sandeep, we can check closing at 1 o'clock instead of waiting for close. Yeah, you can see, you can optimize it, right? As per your understanding, you can exit at 3 o'clock, 2 o'clock, whatever you think is the best for it. So you can see what will happen if I exit at 1 and what happens if I exit at 3:50. You can compare both the results, right? So detailed backtesting, coding and all we will discuss in the later lectures for the people who are joined for the Python course. But for the trading people, it's, I think this, having this much information is more than enough. But what I want you all to never judge a system based on the winning rate. See, this system is good, but is the winning rate something would want? No. There are back-to-back 6 losses also. So does it mean after 5 trades, I won't trade the system? I will trade. And I trade this in the live market. I have back-to-back 3-4 losses also. But it's fine because I've tested it. I don't mind trading it again and again. Only thing I have to make sure I don't lose more when I'm wrong, right? So I think now we'll take a break, and before like taking a break, if anyone has any questions or any suggestions also, like please type in the chat box, and I'll just quickly give an overview of what we did after the systems part, like of the backtesting thing only. Anyone have any questions? Because after the break, we'll move directly to systems. Like all the thing I wanted to cover is covered. Now I'll only discuss systems after this. All good. Yes. Others? Okay. All done. Next session. Yeah. Next session will start at 2. Okay. So if you see this, first I gave you a perspective and then I told you about backtesting, right? So if you see, once we have a strategy which has a good, like from the backtest, we can find out whether strategy is good or bad, right? So that's where our edge comes from. Next session, I think from 2 to 4:35. It depends like how people are coping up, but generally I think it goes to 5 with questions. Yes, Sandeep. But Nifty I didn't test because Nifty only 1 year data is there for weekly options. It started last Feb, right? Bank Nifty 4 years data is there. Can we backtest option buying particularly? Yes, you can backtest. See, you can backtest anything, right? Backtesting, you can do anything, but the goal of backtesting is it tells you whether your system is making money or no. If you want to be the casino, you need to have an edge. Is it straddle or strangle report? It is a straddle report, Solar. See, don't go into the report. The reports are not important, but what is important is backtesting tells you whether the system makes money or no. So if you are trading a system which has good expectancy, then only you can expect to make money. Else you'll slowly lose money. So your first goal is to become a system trader. So whatever systems you trade, it is important that you backtest it thoroughly. No matter, even if you are a discretionary trader, you should test whatever you are doing. So you should know what are the back-to-back losses, what are the back-to-back profits, what is the performance on black swan event days, when not to trade, when to trade. If you do so much analysis, then only it will be easier to trade huge quantities in your system. But everyone's clear, right? Why do we need backtesting? Most of the people even disagree on this, that we don't need to backtest our strategies. Is it clear why backtesting is important and how to do it? That we'll discuss in the Python class. For the trading people, I think an overview is also more than enough, right? Yeah, so backtesting is important, but don't judge a strategy only on the winning rate. There are other factors to consider. So what factor I consider is drawdown. drawdown should be less than my psychology. So I don't want to draw down more than 15%. So strategy which are drawdown less than 15%, I want to trade those strategies. The equity curve, like the drawdown should be like, and there should be even distribution of PNL, like which means it should make consistent money every year. These two things are very important, and it should have positive expectancy. Like net, it should make money, right? Okay, so now I think we'll again meet at 2 p.m. You all can have a 1 hour lunch break. We'll again meet at 2, and from 2 p.m. we'll start discussing systems. So till now, if you have any questions, you all can again think and again like think over it, and you can ask me once we are back. But after 2, we'll directly start with strategies. Okay. Yes, same. So this link will be open. I'm just keeping it on mute and stopping the video. The same link only. You can also do the same. Okay, chalo. Bye everyone. Yeah, so let's begin. Hello. Yeah. Just give me a second. Let me start the recording. Everyone to know. So till now we just discussed buy to back test, what all goes into building a system, and some basic concepts. So now we'll start discussing few strategies which can be applied in the large markets. Before starting them, I just quickly run you through options. I expect every one of you all to know the options, basics of options, but I'll quickly run. I won't like spend like more than 20 minutes. I think this everyone understands what are the basics of options. So mm, yeah. So one thing you can see that if you are a buyer of an option, for example, call option, if the stock remains same, you lose money. If the stock goes up slightly, you lose money. And if the stock falls, you lose money. So you can make money only if the stock goes for a significant amount, then only you can make money. But if you see a call option seller, if the stock remains same, you make money. If the stock falls, you make money. Even if the stock goes up slightly, still you can make money. So you can see the odds are always better for a seller rather than a buyer. So we'll mostly focus on selling only. Only one strategy we'll discuss on buying. Rather, most of the time it will sell because I am a seller only, and I so we'll discuss. So be a buyer or seller, definitely a seller. But it's not that you have to always be a seller. There are certain situations where you can be a buyer also. I'll show you. Like posted on Twitter also something on OI. I'll discuss that also. But that those are the cases when one is to be a buyer. Okay, so I think put option I don't have to discuss this. So I think put and call everyone understand. So see, there are two things. First is having a view using a strategy, whatever could the strategy be, that we will discuss. But creating a view based on options, creating a risk defined. So while building a strategy, you need to keep all these 4-5 points in mind. What the instrument is, What is your view? Is it bullish, bearish, or sideways? What is your stop loss? What and what is the expected number of days you expect the stop loss or target to hit? It is very important if you're trading options, especially on the buy side. So these 4 things are important. 4 or 5 things. So when you create a strategy will have. So first you have a view. So what is the strategy? What is the maximum loss? What is the break even price and what does the payoff look like? So now we'll just create some scenarios also. This is the format that we will follow for any strategy. Okay. So when people say bullish, see, I don't want you to remember any strategy. You can create any strategy if you understand options. So you don't have to remember bull calls, name of any strategies, right? So if you are bullish, what you can do? You can either buy a future, buy a call option, buy a call, sell another call, sell a put, buy a lower put, or short put. You can do 5 things. Till now, is everyone with me? Yeah. Okay. See, I am running through this very quickly because I don't want to waste time on this. I want to discuss strategies, but I want you to know how to do this because then we understand how do we cap our profits, how do we manage the trades. See, trade management is more important than having a view. So I just give. So my question is, I am bullish on Nifty. This is what. So what can I do? I can buy a future. Okay, I buy a future. But what is the drawback? If Nifty goes 100 points, I make 100 points. If Nifty falls 100 points, I lose 100 points. So do I have any edge if I buy a future? Because my profit is also unlimited, but my loss is also unlimited. Is it clear? So I don't have any edge if I buy a future. The payoff is linear, which means goes 100 points, I make 100 points. Nifty falls 100 points, I lose 100 points. Which means there is no edge. What is the second option we can do? If I don't want to buy future, I can buy a call option, ATM call option. So Nifty is at, I can buy 9800 call. Please listen to this carefully. So every you can say this is a good payoff here because my loss is limited, but the profit is unlimited. Okay. But what is the catch? What is your break even? N0 and all this break even, everything we are talking on the expiry day. In between the payoff, in between you can make money also, but this is all on the expiry day. What? So what is the catch? Even if the payoff is better, you will make money only if Nifty goes above 10,139, which means you start making money after a rise of almost 3% from the current levels. Your loss is defined, but the probability of profit is also very low. So you can see 37%. So this 37% is calculated using the delta. So basically, the probability of profit is your probability of your option expiring in the money. Probability. So delta can be used also in a manner that it is the probability of your option expire in the money. ATM options are delta 0.5 because the delta, it's a 50-50% chance either it can expire in the money or out of the money. So say first thing is if you are bullish, you can buy a future. Second is you can buy, but what is the drawback in future? Your losses can be unlimited. The risk to reward is like it's linear. If it goes 100 points, you make 100 points. If it falls 100, you lose 100. Okay, so second option is we can buy a call. The payoff looks good, but the catch is your break even is much higher and your probability of making money is lower. That's why we avoid buying. Okay, so we don't want to. But what we can do is if you are buying, people call it bull calls. So I can do this. Call. So I have bought 9,800. I can sell a 10,100 call. Right? So now you can see your max profit is and your max loss is almost similar. But break even is still higher. Why it is higher? Because it's a strategy. What is a debit strategy? Is a strategy in which you pay theta. You are not getting any time value because you bought an option for 338 but sold for 187 only. So net you are paying time value. So the second option was you buy a call, but if you buy a call, you can lose the entire money. So So to get some time value, you sell a call option, a higher call option. So this is better than a naked call, right? But still your break even has come from 10,000 to 9952, which is still above the buying price. You'll make money only if Nifty goes more than 1.2%. So this is the third option. But I said I like credit strategies. I don't want debit. So what I can do? Can anyone tell me what can I do if I want a credit? Say I assume everyone understands option because I cannot cover the basics of options. What? Sell put? Yes. Sell put and buy put? Yes. Right. So first was buy a future, second was buy a naked call, third was buy a call, sell a call. Okay, other is someone is selling sell a put, right? We can sell a put. Okay, let's sell a put. Anyone who look at this graph, it's dangerous because the profit is capped, but the loss is unlimited. But see the probability, you will make money even if Nifty expires at 9,500. You will start losing only below 9,487, right? But the drawback is the loss is unlimited on the downside. But we are getting time in this, which means if you are selling this put, it's a credit. We are getting credit. So just to cap the loss, what we can do is we can buy a 9,500 or 500 put. Okay, so now this is something what we want. You see that we are getting a credit also, right? We are getting a credit also, and the break even see it's 9, which means even if Nifty falls 1%, you don't lose money. 1.5%. Right? How to adjust this dynamically, that you'll understand. Yeah, call ratio and all are also can be done, but I don't want to give name to any strategies. It should come naturally to you. Till now, is it clear? So to form a bullish view, you can do 5 things. You can buy a future, you can buy a call, you can buy a call, sell another call, you can sell a put, you can sell a put and buy a protection, right? Okay, so till now it's clear, right? So, but for example, if I buy this future, right? The loss is unlimited. I want to get some credit. Can I do this? Can I sell a call? For example, I can sell a 9,800 call I can sell. What does this payoff look like? See, I didn't exit the future. I have a future and I sold a call. Short put, yes. Now in this same only, I can buy a put also. Same strategy, but 3 legs. Let's see. Right? So see, initially we bought a future. In the same strategy, we sold a call and we bought a put. So this is similar to a short put and a buy put, right? Short ATM, buy OTM. Is it clear till now? Yes. So why I'm talking about this is to just show you that you can synthetically create anything. So basically by put call parity is stock plus put is equal to call, right? Hello. Stock plus put is equal to call, which means, so in this only, if I rearrange this, which means S minus C is equal to minus P. So which means if I buy a future and sell a call, the payoff will be similar to a short put. What Ashutosh? No for? See, I don't want to go into the exact. If you understand this stop plus put is equal to call, you can create anything. Basically, there's one more addition where you invest in a risk-free bond and compare the present value. But we don't want to go into this. We want to go into the practical application. Yes. You can use the equation to create synthetics. You don't have to. So basically, for example, if you're buying a future, whatever you're talking, we are talking on expiry only because we are not come to intraday trading now. If I buy and if I sell a call, this is similar to a short put, right? So if I bought a future, my view goes wrong, I can sell a call and convert to a short put. If I still feel that it can fall further, I can buy a put. Means dynamic can convert our strategies into one form, like from naked futures to risk defined. This we will use when we actually trade, and I use it a lot when I actually trade. So when I buy a stock, if it goes in my favor, I'm already in profits. What I'll do, I'll immediately sell a call. So that even if the stock remains sideways, I get some money back. The call will also decay, right? So purpose to show all this is that you can dynamically change from your view from one strategy to another if you know how to adjust your trades. You have to remember name. So basically, these are I don't you have to remember them. So bearish also it's similar thing, right? You can create the same view on the bearish side. And on the sideways, you can do these 4 or 5 things. First is you can short a strangle, you can short a straddle, you short and you short a strangle buy protection, butterflies you short a straddle and buy protection. I think these are very basic. I don't want to go into the strategies also, these strategies. Okay. And when the direction is not clear, you do a long strangle, but the probability of making money is very much low in this case. Doing a long. Okay. I think this everyone understand, in the money, out of the money, at the money. I think Greeks also, I don't have to go, but as I said, delta tells you the probability of option expiring in the money. So higher the delta, the higher the probability of option expiring in the money. So lower delta, which means OTM options have low delta, which means the probability of them expiring in the money is low. And as a buyer, you can make money only if the option expire in the money. Right? So even if you want to buy options, prefer buying ATM or ITM. Don't try to buy OTM. Okay. So I think this most of the people understand. So ATM options are delta 0.5. As the stock Nifty goes up, that ATM option will become in the money and the delta will start increasing. See, I assume you already know. So basically, this is also very simple. So if you're long call, which means you have positive delta. If you're short call, which means you have negative delta. So whatever your view is, delta will be according to that. This we will use to trade intraday strangles. So theta is, so basically if you're selling options, you have positive theta. All options have some intrinsic value plus time value. So as a seller, when we are selling an option, our goal is to capture on the time value also. So direction will also help us, plus time value will also help us. So as a seller, time is always in your favor. So I think this is simple. So basically, if you're short, you have a positive theta. If you're long, you have a negative theta. Vega is basically change in option premium if there's 1% rise in volatility. This concept we use to trade events. So what will happen if the stock prices does not move but the volatility drops? What will happen to the premium? This concept we use, but closer to expiry, the effect of Vega is very negligible. The effect of theta dominates. But we'll discuss this concept in building event trading. So once this PDF is done, I'll directly jump to trading strategies only. So basically, if you're short short wall. If you're long, you're but yeah. So as a seller, you have two risks. You have a risk of that the volatility can rise, which can hurt you, and the other risk is gamma. See, I don't want to go into detail. I think everyone assumes like knows this. So basically, gamma is the rate of change of delta. So what happens on expiry day is the gamma is maximum for ATM options, and the effect of gamma is more significant closer to expiry. So closer to expiry, for example, it's 315 and its market's about to close. Market is at 30,000. Bank Nifty option 30,000. Put option is at 1 rupee. Now, if Bank Nifty falls 500 points, that 1 rupee option will become 500 rupees because the intrinsic value is only 500. So this rate of change of delta basically is what hurts most option sellers. So if we are selling, we have two risks, that the implied vol can rise, the gamma hurts. So gamma, to mitigate gamma, we can close our positions closer to expiry. And as a seller, delta movements can also hurt if your view goes wrong. So this is a summary of all the Greeks. Rho is not applicable to us, not important. It's applicable if you're trading, your book is like a very big book, then it's applicable. So basically, this was a study done by CME. They figured out that 76% options expire worthless. This is an old study, but in recent markets also, like you can see, like most of the options expire worthless. But the risk in option selling is definitely option selling has an edge. But they say option writers eat like a chicken but shit like an elephant, which means you'll always make, for example, you'll always make 10 points, 20 points, 10 points, 20. But if you go wrong, you can even lose 20 years of profits. If you'll remember on Nirmala Sitharaman Day, the Nirmala Sitharaman candle as we call it, 1 rupee option went till 1500 rupees. If you are sold at 1 rupee option, if you are selling, you can get only 1 rupee, but you lost 1500. So if you are an option seller, risk management is the only thing which you have to be very strong at risk management. Then only you can make consistent money. Else, a one black swan will wipe you out completely. So now what we will do is, so we will follow certain systems to have a view. Can we have a stop loss in option selling? Right? Yes, you can have an option a stop loss also. So that will discuss like what to do, how to do. So we can combine both. So basically, to make money in options, you need two things: view on direction and view on volatility. Having view on volatility is slightly tricky, but we have a using our systems. Once we have a view, we have to create an appropriate option strategy, right? So already we said we want to be the casino. If we backtest a strategy has an edge. Can we deploy the same strategy instead of naked futures using options? Because even if we go wrong, we can make money, right? So this I already discussed. Like, so instead of volume, it is open interest here. I assume everyone knows what open interest is. It is the number of open positions. So if price is increasing and open interest is increasing, which means that the similar to the volume interpretation. I think I don't have to spend much time on this. So now what are the risks in option trading? See, people say option selling, definitely it is risky. First is there's a large movement in the underlying delta risk. A black swan. For example, if you sell a put option and market opens lower circuit, you will lose a lot of capital. Second risk is rising VIX or volatility. So first, how do we mitigate this risk? Is by hedging our trade if we are carrying overnight. So overnight, everything should be hedged. Second, the second risk is rising VIX or volatility. To mitigate this risk, you can mitigate volatility risk only by buying options. So if you are selling option, you have to get that vol from somewhere. So you have to buy options if you want to mitigate this risk. Third risk is gamma risk. That closer to expiry, a very large movement in the underlying can, like, you cannot imagine how much money you can lose. So to mitigate gamma risk, you have to close your trades around 2:30 if you're trading on expiry day, or even like in the last week of expiry if you're a beginner. And the fourth risk in Indian markets is option freeze. Sometimes the option gets freeze and you cannot even exit the trade. So to mitigate that, you have to always keep stop loss order in FAR OTM options in your system. So this is just what I wanted to cover on options. Now strategies. Till now, is it clear? Any questions anyone has? Probability of reversal when price increases and open interest decrease. Price increase, open interest decrease. I don't think you can interpret. So basically, I use it as a confirmation. First, I use my system, then I use this as a confirmation. So when we go into positional trading, I'll discuss this. Sandeep. Till now, is it clear? I think this is very basic of options. I don't think I have to spend much time on this. Okay, option freeze means basically the options don't trade at all, which means you cannot exit the trade. So if you have sold an option at 20, sometimes few times it happened, the options opened only at 120. Can we hedge gamma risk? No, gamma risk, see, you can create a risk defined strategy, but the loss will always be there even if a risk defined in the market moves. So best is to exit the trade closer to expiry. To mitigate gamma risk is closer to expiry, you move to a different expiry. Last Thursday, BNF moved wildly. It is the effect of gamma risk. No, movement is not the effect of gamma. Due to the movement, the premium spikes. So if you are trading Bank Nifty, anyone trades Bank Nifty, 1 rupee option becoming 20 rupees, 30 rupees is very common. Like it happens almost on every Thursday. A 1 rupee option becoming 20 rupees and it again comes back to 1. So all that happens due to gamma. Basically, your OTM, ATM options become so in the money that the premiums change so continuous, increase so rapidly. Gamma risk is for ATM only near to expiry, but ITM and OTM. Yeah, see, if you're in the money, the gamma risk is not much, but for ATM, the gamma risk is too high. At expiry, after 3, premium of 2, 3 will become 50, 60. Suddenly, we can catch it and gain. Yeah, it's easier said than done, Sandeep. Like, it's not that easy. Because, see, the probability of that happening is also low, right? The 2 rupee option becoming 50 rupees, 60 rupees. So, what I said, I want to bet on repeatable patterns. I don't want to gamble. So if you have made money on Thursday, you can do this. You can buy 2, 3 rupees option, but that is not what we want to do. But till now, is it clear, right? Okay. Yeah. So I assume you all understand like how to change from one strategy to another. If you have futures, you convert to call because that we will you will use it later. Can we use credit spread for? Yeah, Jitin, you can use that. You can do that. We'll discuss position systems. So now let's start with some systems which I want to discuss. Yeah, overnight everything should be hedged. That's my basic rule. Overnight, before you sleep, you should know what is the max loss if market hits lower circuit or upper circuit. The Singapore Nifty is showing 600 points down. If you have hedged your strategy, you are safe. But you have created if you have created naked longs, you don't even know how much you will lose. So overnight, everything should be hedged. It's fine if we pay the theta, but in the long run, it will definitely help. See, a lot of black swans have happened. Brexit, demonetization, these were overnight. Nirmala Sitharaman, like a lot of things keep happening in the markets from time to time. So anything can happen anytime in the markets. So that's why overnight everything should be hedged. Recently also Nifty had hit 2 lower circuits. Right. So I'll move forward now. I don't want to waste much time on basics. So now let's start with discussions on the options. So I think everyone has a fair idea. So now let's only. Okay. So first thing which I want to cover is event trading. So what is event trading is? What is the concept of it? So basically, during event, we expect due to the event, the implied volatility of option rises. I'll tell you what implied volatility is. But what do we expect is after the announcement is made, the volatility will drop compared to the historical levels. So basically, this is called as volatility crush. So our goal is to play on this volatility drop, right? So how can we play volatility? We are expecting volatility to drop. So what we can do is we can sell options. But which option to sell? Call or put? So instead of, so we don't know the direction, right? So that's why we sell both. So we create a straddle before the event and exit as soon as the result is out to benefit from volatility crush. This we can use for events such as budget, monetary policy, and earning season, right? So I am just giving you an overview. So implied vol is basically the volatility implied by the market. So if you reverse engineer, like you have the premiums, right? Every strike price is a premium. If you reverse engineer using Black-Scholes, you will find you will get an implied vol for each option. So that is what implied vol is. What is the market saying? Basically, the what at this premium, what should be the volatility, right? Historical vol is basically the historical movement of the instrument, and realized vol is what is the actual movement after the event. So we can make money by event trading if the actual movement is less than the implied, right? Realized vol is less than implied vol, then we can make money, right? Because if we are shorting options, we want that the markets do not move much, because if we want to trade on volatility, we don't want to trade on delta. Is the concept clear? What is the concept? I'll show you backtest reports and everything. Is the concept clear? It's very simple. You don't have to do anything. Majorly budget, monetary policy, and earnings. Earnings is risky because earnings generally come after market has also. So if you don't want to take risk, avoid. So I have created a same strategy for Reliance also. But the result is market has after market has. So if Reliance opens more than 10% gap up, gap down, I will lose money. But even if it opens 5% gap up, gap down, I will make money. So basically the concept is similar. As I said, if we want to make money in the markets, we need to have an edge. Edge is not only about predicting direction. You can trade on time, you can trade on volatility. I majorly trade on time and volatility. I hardly trade on direction. The concept is simple. Is it applicable for all FNO stocks? Yes, all FNO stocks. How to select stocks for uptime? Yes, I'm coming to it, Deepak. So basically, it's applicable to all FNO stocks. Ashish, yeah, it's applicable to each. The concept is universal, right? It is applicable to all. But I don't trade all because some stocks don't have even liquid options. So trade only options which are liquid. So I'll discuss where to apply this. So basically, implied vol, historical vol, realized vol. Implied vol, what is the market saying? So this can be found out using reverse engineering, using Black-Scholes. Historical, what is the historical movement? Realize what actually happens, right? So just let's go into it. The concept is clear, I guess. Basically, we want to just opening this. Everyone can see this, right? How to trade the budget. I discussed 3 events, right? Budget, monetary policy, and earnings. Everyone can see this, right? Screen, how to trade the budget. Yes, okay, fine. So how to trade the budget? So if you see this chart, market moves randomly on budgets. Like you cannot say how does the market move. It can go up, it can go down, right? So budget is definitely an uncertain event. Like most people don't know what is going to happen, and market moves are totally random. So can we do some analysis to trade the budget? So this was analysis I did for a webinar just before the budget, one day before the budget. So this is my analysis. So just go through this. So on the left hand side is the spot chart of Nifty in a minute time frame. and this is the PNL of the short straddle. What was my analysis? As I said, how do we backtest? My hypothesis is, if I create a short straddle, do I make money? Okay, let's backtest it. So this is a 1 minute chart of the spot and 1 minute chart of the PNL of the short straddle. So if you see, till 11:45 Nifty was sideways, it dropped, again rallied, again dropped, right? As a trader, you cannot catch these movements. But what happened to a short straddle? Till 11:45, the PNL was 0. See, it went into 40 point profit, again came back, closed at 50 points profit. Let's see what happened in 2015. Markets were sideways till 11:45. A spike on the upside, again fell on the downside, again rallied. As a normal trader, can you trade these movements? Impossible. But see what happened to the straddle. 11:45, 50 points, maximum profit. Let's see 2016. 11:45 sideways, fell, again rallied, again fell. You see this kind of trade went into slightly loss, minus 20-95 points at 12:35, but eventually closed in profit. Let's see what happened 17. Market rallied in one direction, which means the directional movement. Still we made money. If you see 40 point was there, right? 2018, market dipped, again rallied. Still the straddle made money. 2019, market dipped and it closed at late day low, but you were in a profit of 30 points and eventually it closed at flat. So this is a summary for all the years from 2009. This last also minus 0.8. It's actually, it was in a profit of 30 points and then it closed at minus 0.8. But till now, is everyone with me? That you can see that markets are moving so randomly. It is going up, going down, but still you are making money. Is it clear till now? Yes. So if you see in 2020, so what I said, you have to have backtest, then only you have the conviction to trade. In 2020, so I had done this backtest. I had done this one day before the budget because I was confident. So on the budget day, Nifty was at around 12,000. So I created 12,000 straddle. Nifty fell 450 points from that level. Still I made 30 points. As a trader, if you are a directional trader, I can guarantee that it's impossible to catch these movements. Even if you catch, you need to give a very big stop loss. But so why did this make money? Because you can see the short straddle entry price 439, 331, 279. So this was the premium you were getting before the result. But as soon as the result is announced, the volatility drops and the premiums fell. That's why you can make money, right? So from the analysis, then I need to give some entry exit logic, right? So what did I do? Enter a short straddle with a stop loss of 30-40 points. Why 30-40 points, right? If you can see that here it went into minus 25. To be on the safe side, I want to keep a logical stop loss, right? If I keep a 5-point stop loss, I will lose money. So logical stop loss is historically it has gone to minus 25. Let's give a buffer of 35-40 points. Okay. When do I enter the trade? You can see till 11:45, all the charts are sideways, the short straddle PNL. So why to enter the trade 2 hour before at 9:15? Enter the trade at 11:45 is the best time. So what is the third point? Close or partially book if you are getting more than 35, 25, 30. Sometimes after hitting 25-30 points, it is again falling. Because our goal is to capture the wall crush. Our goal. So once we capture 20-35 points, we are out of the trade. Is it clear? This strategy has an accuracy of 100% for last 11 years. And you can have the conviction only if you do such a detailed back test. If you did not follow any of one of the thing, if you kept a stop loss less than in 2020, it went till minus 22 points loss. If you kept a smaller stop loss, you will lose. If you entered before 11:45, you won't make any money and you can even exit. If you wait for more than 25-30 points, you can even end in loss. If you do such detailed analysis, then only you will have edge over others, right? And this slide is available. I think I did this with Elon Markets also. It's available online also. So now are you able to understand how we are getting an edge in spite of the movement? So you don't have to trade. Most of the people, market kya lag raha hai, badhega. It does not matter. We know what we want to do. And if you see, this is not one analysis, I did 6 analysis. You can see, right? 5 analysis. So every analysis was a hypothesis. I tested it. Only the first analysis gave me money. So I thought, okay, this is giving money. Let's do this. Is it clear? I showed about budget. Is it clear to everyone? Is everyone able to understand the power of quantitative trading? In spite of the movement, and you see all professional traders, even like the people with trading with large capital, avoid trading on budget. It does not matter that next time we cannot lose money, even if the accuracy, next time we can lose money, but it's fine. We have a stop loss, right? 25 point, 30 point stop loss is an affordable stop loss and a logical stop loss. No. So see, 30, 40 point stop loss, when I say it's a combined stop loss on the straddle, not on each leg. Everyone get this, right? It's a stop loss on the straddle, not on the leg. If you keep a stop loss on the leg, you'll be thrown out. So you have to keep a stop loss based on M2M. If you are doing one lot Nifty, which is 75, so 75 into 30, around 2,000, 2,500 points you lose, you will exit the trade. See, no matter if this has 100% accuracy, I'll always have a stop loss. What if the next time it can go wrong, right? Is everyone clear how the stop loss is? It is on the combined straddle, not on individual leg. Is it clear, Sandeep and others? Okay, so I discussed budget. Budget you all can trade because it is generally during market hour, so you can exit also, like if the stop loss is hit. RBI in market hours. So see, I won't share the backtest report because this is something which are for own use, but I'm sharing the concept. So similar to budget I did on RBI policy. Concept is same, right? This is the how the market moved. Bank Nifty. This is for 2016. This is how the short straddle moved. This is how the this is the PNL. This is how the market moved. This is how the PNL moved. So similar analysis I've done for RBI also. This is the Excel. Like, so I did on 2 times. I found out 11 a.m. is the best time, and so in this case, it is in the initial backtest I exited at close. But what I found out is, if you want to trade RBI, see, if you see one day there was a loss of minus 203 points, I exited close. Why? Because market moved in a directional manner. So if you want to trade RBI, simple, trade with a 100-point stop loss. 100 is also big. You can trade with a smaller stop loss also, but 100 is the optimum stop loss I feel. What should you, Abhishek, you are selling ATM option, whatever the ATM option is. ATM. So this is RBI. So if you want to trade RBI using a similar concept, enter at 11 a.m., create a short straddle, keep a stop loss of 100 points. Why 100 points? Because Bank Nifty is volatile, more volatile than Nifty. So if you see in certain, it happened and Bank Nifty went slightly into negative, again closer to positive. So you can keep a 100-point stop loss or even a 50-point stop loss and exit at 50 points. You can make more points also, but the risk is very high in Bank Nifty. I trade Bank Nifty day in, day out. So I can tell that Bank Nifty, you have to get out if you're getting profits. So you can enter with a stop loss of, if you don't want to take much risk, you can enter 50-50. If you want to take risk, you can enter 100-100. But generally, I would say if you're getting 50-point profit, exit the trade. No, Jitin, it's combined stop loss. Combined. How to put stop loss in the system? No one allows it. If you can do it only using if you have execution algorithm. So Purvi, if you don't trade huge quantities, like if you're trading less than 50 lots, you can just monitor the screen. And so what you can do is you can monitor the screen, and initially, just as a risk management practice, you can keep a double stop loss on both the premiums. So for example, if you're selling a premium stock at put at 200 and call at 200, keep a stop loss on 400 on both. No combined stop loss, small brokers won't provide. You have to move to execution algorithm. So IIFL does it. So you have to move to this. But see, if you are not a small, if you're trading less than crores of capital, I don't. It's not even required. If total stop loss, so let just so everyone can see this, right? So for example, call premium is 200. If you're trading with small capital less than 1 crore, so less than 1 crore is a small capital. So if you're trading with less than, you need to move to execution. So if for example you sell at 200, 400, right? So what I'm saying is combined premium is 50, 450, which means if total premium becomes 450, you'll exit the trade because one will decay and one will lose money. So what you can do is a safe practice. You can keep a stop loss of 400 on both. If you don't have stop, you can keep stop loss double. This is just for a risk management practice. But if you're getting 51 profit, you'll exit. Or if you see a loss of minus 50 points on your, is it clear? But when I say stop loss, it is on the combined premium. Because what happens is if you market moves in one direction, the other will decay and the next leg will give money. Right? And see if you trade with like if you're trading 5-10 lots, you can manually observe the screen and put the stop loss. But for safe practice, keep a stop loss at double. See, whatever strategy you are trading, there is risk. Selling options definitely risk. So keep a stop loss. Does not mean the good accuracy you won't keep a stop loss. Stop loss is a must. So right, is it clear on the stop loss part? Right, most of the people are confused on the stop loss. So if you're trading with zero the upstock, it's fine. You can keep a stop loss on the combined leg, on the each individual leg at a double premium. Clear, Purvi and Deepak? Okay, fine. Okay, so I discussed RBI, I discussed budget. This is for see what this you can do because the results are during market hours. But there's one more thing we can trade is earnings. So earning. Am I audible? Hello. Okay, sorry, my internet got disconnected. Okay. Okay. So yeah. So we were on the just let me start. Okay. I'm sharing my screen. Yeah, so I was talking about Reliance. So you can see that how the volatility crush happens. Okay, so just show. Let me show you a backtest report. Uh, yeah. So you can see this. I did a it's a portfolio level backtest on stocks which can be traded for earnings. The logic is stop loss 10% of the combined premium, target also 10%. This is what the equity curve kind of looks like. But this is slightly risky, and I would say like it is better like if you avoid this like because as I said, you eat like a chicken but shit like an elephant. So certain times the stocks even gap up, gap down very significantly, so you can lose a lot of money also there. So it's better, I would say, stick to results which are during market hours, stick to RBI policy, stick to budget. If you want to take risk, you can do this. So I like to take risk, so I generally trade this also. But yeah, so this is risky, definitely very risky. And if you're trading with a small capital, don't do. You should not do this if you have less than 25 lakhs capital, because the risk is also high. Yes, yes, there's Deepak. It's definitely risky. Tata Motors open 20% gap up, gap down. So see, whatever I discuss, I'll tell you the risk also. So this is not suitable, but you can trade RBI, you can trade budget, because you already know the risk. In this, you don't know the risk. You can use iron condor, but basically you don't make much money if you use iron condor. So it's equivalent to not trading only. So you have to wait till expiry. The next day, if like you get a very, you don't get much. So I used to trade using iron condor. You don't get much money. You don't make much money. Sandeep, because see, whatever you lose in the straddle, whatever you make in the straddle, the wings will lose you the same equivalent amount if the stock moves a lot. So that's why I would say it's better done naked, but you can hedge the downside. If you're willing to take the upside risk, hedge only one leg. So you can create a broken condor, like buy only protection on the downside. Okay, so the concept is clear. I have showed all these things with proof, and I have tested this on minute by minute data. Earnings, I would still say not suitable for someone with a smaller capital. Someone with a bigger capital can do it, but rest of you all can trade the budget, uh, can trade the RBI policy. Clear? Till now, is it clear? Like, how did we? So now we discussed. So first we were talking about direction. Now we discussed this strategy is purely based on volatility crush. All professional traders do it, but they most of them don't backtest enough, so they don't know when to enter, when to exit. But definitely, this strategy makes money, and it is a universal fact. So it will stop making money. The volatility crush does not happen. But I have been doing it for quite a long time, and it's like mostly the volatility crush is there. So is it clear? If this is clear, then we'll move on to a different strategy. Okay, fine. So yeah, so we discussed. Okay. Okay. So this is one system which we discussed on event. So till now we have discussed only two systems. First is was the long-term investing system, but in that you can add a fundamental flavor also. You can use a fundamental screener also. Second, we discussed the event trading system, when to trade it. So earnings season going. You can observe Reliance tomorrow. What if you created a 1460 or 1480 standard? What happens to the premiums tomorrow? Just observe it. Okay. So now let's do some directional systems. So this is a system which we recently tested. I would say only 1 month ago, but the results are like better. But still, I'm trying to optimize it further. But I'll just give you an idea what this system is. See, I am not much of a directional trader. I'm more of a. I try to bet more on theta. I try to bet more on volatility. Directional, I do it, but I use direction in a different manner. So I'll explain how I use direction. So basically, the system is simple. Entry logic is buy if 10-minute candle closes above R1 pivot. R1, I guess everyone knows what pivots are, right? Everyone know what pivot points are. Yeah. So basically the strategy is simple. You buy if a candle closes, 10-minute candle closes above R1 pivot. Stop loss is below the 10-minute candle low. Exit if stop loss hit or at 315. So now I'm doing at 315. Simple pivot and kite. Yes, Soloy. Simple pivot. Standard pivot. Okay. You can do same on the short side also. Short if the stock closes below S1, stop loss above the candle high, exit at 315 or stop loss it, right? So recently I posted 2 or 3 trades also on Twitter back to back using the same system, and I said I'm testing it. So see, this is in Kotak Bank. This red line is the R1 pivot. Where my cursor is. It closed above R1. This is a 10-minute time frame. I bought the stop loss is below this low. Right. What you can do is instead of exiting at 315, so whatever your risk is, for example, if you buy Kotak at 1500, your stop loss is 1450. Your risk is 50 points. If you get 50 points, move the stop loss to cost. If you get more 50 points, move the stop loss by 50 points. Okay. So exit. I would say exiting a trade is an art, but you can getting profit. So basically, the goal is if you are making profit, the trade should not end in loss. But the concept is if any candle closes above R1, you buy it. There's a stop loss below the candle low, and you trail it. Is it clear? So I found out these things, like this pattern happens in most stocks which are. So this is the same thing in HDFC. This is also a recent trade. I think 28th April only. So you see here you can buy. The stop loss is below the stop loss very small. You keep trailing the trade. If you exit at 3, you can capture 4-5% move easily. You can test it yourself. This is very simple to back test also. You can go bar by bar in 10-minute chart. See whenever it closes above R1, you buy, exit at stop loss. You can see it. Is it right? I don't like the back test is basically going on, so I don't want to share the back test because we are still optimizing it. Have you done with respect to S1%? Yes, I did. I did for S1 also. Yeah. How to select stock, that will come when we come to positional trading. But the concept is clear, right? So basically, what I do is I have a watch list ready for me. So I always run on that watch list only. Yes, Pushpin. S1 also, the results are good only, I would say. Should I move forward? This is a recent system I tested. That's why I'll share the report maybe when it's like very complete. So like now the basic report is looking very good. It's decent. Is it an option trade or future trade? Future trade. What's DD? What is DD? Where is DD? What's the drawdown? Okay. The drawdown is, I would say, around 15%. So the drawdown also depends on your leverage. Now, how much leverage you take, the drawdown depends on that. but it's around 15%. But the equity curve is encouraging. You can try this for few stocks and test it. Is it clear? Should I move forward? So there's nothing much in this strategy. Basically, this is the only thing in this strategy. You can backtest it. I share the backtest report when it's like, because I'm trying to optimize it, because I did it for 350, I'm trying to optimize it. How to identify R1? R1 is there in all chart patterns, right? Like all platforms, they offer pivots. Sandeep. Yes, 10-minute chart. If you are Zerodha user, you can see on Zerodha Kite also charts are there. You can use Trading View. And this strategy you can see event trading. I understand it is difficult to backtest if you don't know Python, but this you can easily backtest yourself. How do we have to test for all FNO stocks or selectives? So no, selected. See, Abhishek, you have to test on stocks which you trade. Whatever your watch list is. So I'll decide. I'll tell you how I create a watch list. So I trade on those stocks only. Previous day of pivot or live pivot? Live current market pivot. Today's pivot. Have you tried it on index? Yes, index Bank Nifty I have tried. Standard Rajashi. Jitin, Bank Nifty I tried. Bank Nifty results are good. Okay, so let's move forward. So I don't think there's there's much to explain in this system. Now let's come to the most important part, which is intraday. Most of the people find it difficult to trade intraday, and obviously intraday trading, I would say it's a very difficult thing to do. So what is intraday trading? So intraday trading is basically, there are specific points where most people take the decisions. So if you want to trade intraday, you want price to either accept or reject at those levels and then trade accordingly. So when I trade intraday, for me, previous day high and previous day low are important levels. There are specific patterns which we will discuss in the next slide, and they have high probability. So whenever those patterns appear, I create accordingly. I create option strategies accordingly. Right. So basically, what intraday trading is basically you want. So as I said, in candlestick is information important at certain locations. So for me in intraday trading, what I said, high and low. What I said is candlestick is important at support or resistance. Right. If I'm an intraday trader, for me previous day high is a resistance and a previous day low is support. I want candlestick pattern at those levels to decide whether to trade or not trade. Is it clear till now? The same concept which I told you earlier, I'm applying it in intraday trading. Right? So basically I want candlestick to be except at previous day low, right? Simple. So and then we can create a appropriate option strategy that we'll discuss. Okay. So in intraday trading, what you do is first you mark previous day high, previous day low. PDH means previous day high, PDL previous day low. You also mark important swing high, swing lows, and any gaps on the daily chart. What we want is wait for price action at these levels. There are certain patterns which I'll discuss in the next slide, and opening is the key for intraday. A good intraday trader trades the open. I trade the open. Most of my trades are there by 9:20. Opening is the key for intraday trading. So I'll discuss how to do it. So now let me give you a concept. So see, what price can do two things. Either it can be in a trend, it can be in a range, right? In trend, it can do two things. It can have momentum or it can have lack of momentum. In range, it can do two things. It can be either highly volatile or it can have low volatility. Is it clear? This is very important. See, what is price doing? Price can be in trend or it can be sideways. In trend also, it can be, the trend is very strong or there is no strength in the trend. In volatility, it can happen that it is very highly volatile and it's low volatility. Is it clear? Okay. So now let's come to certain patterns. So there are generally 4 patterns which I generally use, and these are the patterns I use on a daily basis. So first is bullish pattern. Let's discuss the bullish pattern. DHS, which means day high breaks. Day high means previous day high breaks and sustains, right? But this should happen in the at the opening time. So let's discuss this first pattern. So what is this? Previous day high breaks and sustains. If I'm an intraday trader, previous day high is resistance for me, right? If it breaks and sustains, which means what? I'm bullish or bearish? Bullish, right? So the setup is simple, but it should happen near the opening time, before 9:30. Why, I'll tell you. So the setup is simple. First 5-minute candle opens above PDH, previous day, slight gap up, or closes above PDH. It should be a bullish candlestick or pin bar candlestick. That is fine. Entry is buy as price crosses above first 5-minute candle high. Stop loss is previous day high or the opening candle low, whichever is close. Again, read this. I'll show you examples in the next slide. So the setup is simple. See what I said. I have a hypothesis. I want to backtest it. So what is my hypothesis? If first 5-minute candle closes previous day high, I'll buy it. My stop loss will be either previous day high or the day low candle, whichever is small. Is it clear? Right? Okay. So just let's do some examples. So what was the pattern? What did I mention? First 5-minute candle opens above PDH or closes above PDH. So Bank Nifty first 5-minute opens above PDH. Okay, fine. Buy as price crosses above first 5-minute candle high. But this gap up should not be very big. I have mentioned slide gap up, right? Slide gap up is fine. In Bank Nifty, 200-point gap up is still fine. More than that, it's not acceptable. Right? So what is the entry point? Buy as price crosses above first 5 minutes. Okay, I buy it. I buy it here. What is the stop loss? Day low or previous day high, whichever is lower. So in this case, what is the stop loss? Day low or previous day high? Day low, right? Yeah, day low. Yes. So I buy. So I buy the stock. So that. So it's fine. How to manage the exit rate, that I'll tell you later. But the concept is clear, right? Yeah. Okay. Yes. So suppose I buy this future here as soon as this. Suppose if I get 200 points in my favor, the best thing to do is in this. I'll show you why did I discuss those patterns earlier. Let's do Bank. Okay. Execution you can do anyhow. If I'm bullish, I showed you 5 things you can do. It depends on you, on your risk appetite. Suppose I am buying a right. I buy a future. I buy it with a stop loss. Right. What happens is the trade goes in my favor. I'm getting 200 points. What I will do is now the stock now Bank Nifty is at 750. I'll sell a 22,000 call. Sell any call, even 80 call. But when Bank Nifty goes up, it will become 760. So see what happened is, so what will happen? So now two things can happen. Bank Nifty, for example, Bank Nifty becomes sideways for some time, which means it is at, and generally that is what happens. So what will happen is this option will also decay, right? But if the market keeps going up, anyways you are making money. But just you are doing one thing is you are capping your profits, which is fine because very high directional moves are rare, and that you can capture using R1. But if you're using this, you're anyways you want to cap your profits also, right? Because see what happens, market generally can again come back to day low, and your stop loss can be it. But in this case, even if you keep a stop loss at cost after getting 200 points, even if your stop loss is hit, this call option will give you some money. And if the market becomes trending and closes the day, you will make more money than what you are making at 11 a.m., 12 p.m., right? Is it clear? See how to manage the trade is even if you don't want to sell the call option, you can keep the stop loss at cost. So how I trail a stop loss is whatever your risk is. For example, your stop loss in Bank Nifty was 200 points. If you are getting 200 points, move the stop loss to cost. But what I do is if I get 200 points, instead of moving the stop, I move the stop loss to cost and sell a call option also. Because what happens is generally after 11 to 1 market is high days. You can capture some time value also. Let's do some other example. In this case, there was slight gap up. In first 5 minutes, it broke previous day high, right? In this case, what's the stop loss? Previous day high or yes, you can buy ITM CE also instead of future. See, as I said, execution, I showed you 5 ways, right? You can do anything. You can buy a call, you can sell a put, you can buy a naked future, you can do anything. Execution is depends on your risk appetite. Is it clear, Soma? Yes, if you're buying option, I would say don't buy in the near expiry, buy in the monthly expiry so that the decay is less. Right? So yeah, stop loss will be previous day because the previous day is closer to this. So what happens is if you can see here, see the stock is sideways, right? If you sell a call option here, if you're getting, what happens is this option will also decay. Is it clear? See, it's not necessary to sell a call option, but as an intraday trader, first thing is locking your profits. Intraday trading profits also go very quickly. If you trade the markets, you understand this. How quickly the profits vanish. So it's important to lock your profits. Already 200 points, fine. Now just lock it. And even if you're locking your profits, does not mean you're giving up the game. If the market goes up, you still make more than 200 points. Is it clear? Okay, so let's see for stocks also. So, for example, this first candle broke previous day, so our stop loss is buy above this level, right? When you are buying, in this case, what is the stop loss? PDH or day low? This first candle, someone is saying day low. Why day low? This is the first candle. It will be PDH, right? Smaller. Whichever is nearer is your stop loss. So you buy above this candle, stop loss is below PDH. It goes in your favor, right? In stocks, it's okay even if you don't sell options. Stocks, you can trail the trade because stocks, if you sell options, it's illiquid also. So trading, how to manage the trade is completely on you. You can buy once you are in profit. You can either move the stop loss to cost. You can for capturing theta detail. I sell weekly. The DK maximum DK is on weekly options. So once I'm in profit, I'll sell an option. Is this also? No, this is 5 minutes. I trade the 5 minute chart only in the pivot. I did 10 minutes because for additional confirmation. Sometimes in 5 minutes it closes and again comes back. And pivot is a new system which I'm testing. Is this clear, PDH? In this case, entry would be on the fifth candle. 1, 2, 3. Yes. So yeah, as soon as this, yeah, fifth candle, Deepak, right? So what I do is I keep a buy order about this. So as soon as that the candle comes, it gets triggered. Okay, fine. So now logically think, see when, so okay, this strategy, but how did I think of this? So what I did is I observed all top intraday gainers and losers for last 5 years. I have a screenshot of all the top gainers for last 5 years. I was going through them. I tried to find out what is the common pattern. Like, can I tell at opening what this stock will goes at day high? I figured out one thing is that most of the stock which close at the which are gainers of the day generally break the first 5 minutes, the last day high in the first 5 minutes or 10 minutes. You're gonna observe the same thing. So okay, so I thought okay, this is there. Then can I build a strategy around it? Let's do one thing. Let's buy above previous day high and keep a logical stop loss. Why previous day high stop loss? Because see, if people are buying above previous day high, I am buying that price is sustaining our previous day high. So my rejection point will be, what did I say? What is the stop loss? Which means I go wrong. When will I go wrong? If the price again comes below PDH, right? That was a resistance, right? Previous day was a resistance. If price closes above that, and if it is a resistance, now it should act as support. If it is price is again coming below it, which means my view is wrong. Is it how strategies are built logically? So this is the test, right? Okay. So same for Oro Pharma. You can see that this candle, you buy the stop loss is previous day and you trail it. So you see what happens is after an initial move. So if you are trading intraday by 10:30, you should try to exit your trades because the majority move again comes after 1:30, right? So what technique you can use is, okay. So what technique you can use is, there's a technique I use. I think there's something called as R in trading. This is equivalent to risk. So R is your risk. So if you're a professional trader, you'll always tell your trades in terms of R. So R is basically buy, sell, stop loss or R. Suppose you buy a stock at 100. Let's see. Stop loss. Why consider PDH as resistance and PDL as support in trading? Okay, if you logically think, why did yesterday high? Why did the yesterday high was a high? Because they were selling at those levels, right? And why was the yesterday low was a low? Because they was buying at those levels. If I am a 5 minute time frame player, I won't use at a monthly chart for my support and resistance. For me, previous day resistance are good support and resistance zone, and swing players, those who trade positional, they trail their stop loss using previous day high and previous day low. So they stop and reverse at these levels. So logically think the previous day high was a previous day high due to a reason, because at that high there was some selling. That's why the price came below that. Instead the price would have gone above that, right? So those levels act as support and resistance. Is it clear, Abhishek? What about a bald candle? What is a bald candle? Doji, you mean? Yeah, doji is also similar thing, right? Achha, Maru. Yeah, so that's why I'm saying that. So if, yeah, so if for Sandeep, what is play? Like, I don't get your question. Yes, So that is there in the slide. I'll show you now. I'll show you. Yes, definitely. So yeah, that. Now you're thinking like a system trader. I'll show you what I did. Yes, definitely. So that is the time you need to do straddles and strangles. It's already there in the slide. I'll show you. Yes, Sandeep. Is it clear? Yes, when the opening is between range, as I said, opening is the key. Open is within range. Okay, yeah. So now let's buy, stop, exit, stop loss. Okay, if you buy at 95, stop loss is 95. Exit at suppose 110. So see in trading, so this is basically a 2 hour trade. 2 hour. So for example, if you buy a stock at 100, your stop loss is 95. You exit the stock at 110, which means what was your risk? Initial risk 5, but you got a reward of 10, which means if you tell a trader, see in making money, it's not important how you make money, but it's important how much risk do you take to make that money. So if you're making 2 hour, it's good. But for example, imagine your stop loss was 50, which means you're taking a 50 points. You're getting only hello. You're taking a risk of 50 points, but you're getting only 10 points. This is 10 by 0.2 R. If you are a system trader, you want to have your R should be at least 1.6. Why 1.6? There's a lot of studies done on that. See, if a system has 50% accuracy and your system R is only 1 R, which means if you're right, you make one. If you're wrong, you lose one. So overall, what will happen? You won't make any money. You will end up paying charges. But if your system, if you are right, you lose R. If you're right, an average you make 2 R, which means even if you are right 50% of the time, you'll make money, because when you're right, you're making 2 times of your loss, and when you're wrong, you're losing only 1 R. Is this concept clear? What is R? So there's a book of Van Tharp on the similar topic. Prices. I'm just giving you a concept, and if you want, you can read this book. I think it's one of the best books on risk management. See, as a trader, always think in terms of risk. How much risk I'm taking to make that money? Okay, the budget trade I'm doing, what is my risk? 20-30 points. I'm making 30 points. It's fine. It's 1 hour only, but the accuracy is 100%, right? So you have to think in those terms. But if the accuracy was 20% in budget trade, I would not trade only, right? The book price is $300, but it's okay. You can find the PDF online. Any one of y'all can do it. I have it. I can also share it later. Where was I? Yeah. So as a trader, it's always important. I can say one thing with confidence. You cannot be a great trader if you are not a great risk manager. So always think in terms of risk. So when I take a trade, I always think in terms of risk. I don't see how much will I make today. How much will I lose is in our hands. How much you can make, it's not in your hands. It all depends on the market. So if you are trading, always keep a stop loss in the system. No matter how brilliant trader you are, always don't keep the stop loss in your mind. People keep a mental stop loss. They say it will trigger, it will come down. Just do you think Nifty comes down just to hit your stop loss? There are a lot of traders more than us trading in the market. So don't think that. So that's why I said keep a logical stop loss, na. Don't keep an affordable stop loss. If you cannot afford it, don't trade. Trade a smaller quantity, but the stop loss should be logical. So whatever your stop loss is basically is your R. So you will exit the trade if you are making at least more than your risk, right? So for example, in this case, your risk is 50. You'll trail your stop loss if you're making 50. Just to make 10, that does not make sense. If you're risking 50, you should at least make 50. So how to trail? That is an important question. So whatever risk you take, it is 1 hour. So if you're buying this stock, you already know what is your stop loss, right? For example, in this, it's 10 points. If you make 10 points profit, which means whatever your risk was, you were making that return, move the stop loss to cost. If the stock again goes to 1.5 hour, move the stop loss to 0.5 hour. So you will keep trailing your stop loss, right? But once you are in profit, once you are getting 1 hour, lock the profit by selling options also, or you can keep trailing. It all depends on you, but I like to trail the trade. I don't like to exit my trades, because as I said, it is important to make big money also when you are right? If you can capture 5-10% move even once a week, it's very good, right? Does not mean system trading won't give you losses. It will give you losses, but you have to keep your losses small and trail your profits. Is it clear how to trail? I'll give you some more points also on how to trail in intraday, but is it clear that whatever risk you take, so as a trader now always think in terms of risk. If I ask you what were your last 10 trades result, you should say 5 hours, 6 hours. You should not say I made 10,000, 20,000. No, I want to know how much risk you took to make that money. Anyone can make 10,000. If I get 1 crore, buy one stock and keep an unlimited stop loss, and whenever I get 10,000, I'll exit. So that does not make sense. As a trader, it's always important to talk in terms of risk. How much risk you are taking to make that return. So remember this concept of R. R is the risk you are taking on one unit. If you are a system trader, you want your system to have at least 1.6 R, because if you account for charges and everything, your R will also go down. So at least have a 1.5, 1.6 R, right? So now we discussed only one pattern: day high breaks and sustains. Same thing can happen on the day low side also. Day low breaks and sustains. Day low breaks and sustains, which means we would like to short. So the first 5 minute open below PDL, same pattern, same logic. Sell if price below first candle minute low, stop loss either PDL or day low, whichever is closed. Let's see example. This is Vedanta. This where my cursor is. This candle broke the previous day low. I'll short this. What is my stop loss? PDL or day high? Day high. Yes, PDL. So when I shorted this, my stop loss, for example, was 2 points, right? Here I'm getting 2 points. Let's move the stop loss to cost. Again getting more 2 points, again trail the stop loss. Again getting more 2 points, again trail the stop loss. Or you can sell a put option here, or you can trail that. So it depends on you how you want to trade. As I said, there are different ways to express the same view. You want to short. How do we quantify slide gap down when building a system? Can we take this as 0.5%? Yes, 0.5% you can take. I generally, for gap, I use some certain different systems only. So you can use 0.5%. In Bank Nifty, I specified 200. So yeah, basically you can say 0.5%. Clear, Abhishek? Yeah. So you trail the trade. See, your goal is to make majority of your money when you are right. As traders, money is made in spurts. That I can tell you with experience. In 12 months, I have only 3 months which give me 80% of the profits. Rest 7 months are like time pass. I'm just hanging in, making decent money, like not very big money, but not even losing, making 1-2%, 3%. But 2 or 3 months, for example, March was a very great month because like volatility also dropped after reaching a peak. So intraday I was making good money. But certain months won't make. So April was not that great. So that is fine. But I have tested my system. So when I take a trade, I don't worry about the losses. I just worry how to manage the risk. why would you sell a put option if the future price is falling? I would sell a put option because I am already short of future, right? Short of future, and if the price is going in my favor, I'll sell a put. I'll show you why. Because I want to cap my profits now. See, as a trader, you have to wait, I'll share my screen. Trading intraday, profits, capture your profits also very quickly. For example of Nifty, I'm shorting Nifty. I am in 100 point profit, right? But you know the market volatility is too high. It can again spike back 100 points, 200 points. Suppose you are getting 300 points profit. So as I said, there are different ways to trail. You can either trail, you can prefer not to sell option also. So now I have sold a 9,800 option in my favor. I am getting 300 points. This night, the market will be at 200. I'll sell this. So you can see this. Even if Nifty keeps falling, instead of booking the profit at 400 points, why not be with the trade? Right? On the downside, I'm anyways making money. I'm just capping my profits, but still it is 1,000 points on Nifty. But I was making only 400 points. So when I go overnight, why not sell this put and go? Or if you're trading intraday, you can sell this put. So what happens is, even if the stock keeps falling, see, future has a delta of 1. If you're selling a put option, that is a delta of 0.3. If the market, but your net delta is 0.7, right? So even if Nifty points 100 points, you won't make 100, you will make 70 points. Is it making sense what I'm saying? See, I'm reducing my delta, but I'm still short, which means I won't make 100 points if Nifty falls 100 points, but I'll make at least 60, 70 points. I'm doing this to cap my profits. Now, because trading, I don't know, Nifty can fall more or can rise also, can reverse also, right? Is it clear, Sarvesh? I have just lowered my net delta. Is it clear to everyone? See, it's not necessary you have to do this. You can keep a stop loss also. But I don't like to keep a stop loss because if you keep a smaller stop loss, it will throw you out. I said I don't like to keep affordable stop loss. I like to keep a logical stop loss. If it's a big stop loss, I'm in profit. I like to cap those profits. And as a good trader, what we do is we pyramid it to our position. Pyramiding as in, like, initially I shorted 2 lots. It's going in my favor. I sold put options. Again, if the day low is broken, I'll again sell more lots. So as the trade goes in my favor, I'll keep building my position. So if I'm wrong on a small quantity. But if I'm right on a big quantity. So this will discuss in risk management, money management. But the concept is, when you're right, you should have a maximum position size. When you're wrong, you should have a smallest position size. So this has to be done because you're just lowering your delta, but not giving up. You have two options: either book the 400 points, keep a stop loss at cost, or sell a put, which is a better option. You have to, if you are on 400 points profit in short Nifty, what is a better option? Selling put, keeping a stop loss at cost, or exiting the trade. If you exit, you make 400 points. If stop loss is hit at cost, you don't make anything. If you sell a put, you are getting both. If the stock falls, you can make money. Stock remains sideways, the put will decay. If the stock again rallies and hits day high, or like your stop loss is hit, you can make money. The put can make money. Is it clear why I am selling put? It's not necessary you have to sell put. You can say, yeah, yes, Deepak. So it's not necessary. You see, I do it because I know how to manage my trades. You can keep a stop loss also. You can book 400 points also. 400 points also very good. It all, but I like to be with the trade if it's in my favor, right? Yeah. So yeah. So this was one example of Vedanta. DHFL also same. Day low broke. You keep trailing, right? By selling a put, we are just lowering a delta, and I'm selling not at the same time. I'm selling when I'm in profit to lock the profits. because these moves are rare. Generally, stocks reverse only, right? If you observe the markets, you short a stock and it closes at day low, it's rare. It will close in between only. So this I'm doing just to lock my profit. It's not necessary to do. You can exit also. Overall, just shifting the break even to a higher value, right? Yes, kind of you can say, but for intraday, if you're doing only for intraday, I would say the break even does not matter. But if you're doing for intraday, I sell a put option, and suppose Nifty fell 400 points, and for next 2 hours, Nifty is at the same level. The put option will decay. If Nifty rallies even 100 points, I lose 100 points on future, but the put will give me some money. So basically, if you do it mathematically, if you're short future, your delta is -1. If you're selling a put option, for example, FAR OTM, see ATM option of delta of 0.5. I'm selling FAR OTM, my delta is 0.3. So net my delta is minus 0.7, which means I'll make money. Even if Nifty rises 100 points, I'll lose 70 points. Nifty falls 100 points, I'll make only 70 points. Yes, Abhishek, right. So this is what I do. It's not necessarily you have to do it. I do it because I like to lock my profits. You can trail also. You can trail also using 1 hour logic, or you can keep trailing your trade. Right? Should I move forward? Is it clear to everyone what are we doing and how are we doing? Is everyone understanding how the delta is reducing? A future short has a minus 0.1 delta. If I sell a put, which is a delta of 0.3, your delta becomes 0.7, minus 0.7. It means you are still you make money, the market falls, but you make less money. It's fine. You're giving up the gains, you're locking the profits, and you are giving up certain gains, but it is fine, right? Okay. So we discussed two patterns. Now we discussed previous day high breaks and sustains, previous day low breaks and sustains. What if previous day high breaks and rejects? I think the risk to reward method you are saying. Oh yes, I like to do it in that manner, which means, see, what I do is when I get a 1 hour profit, right? I like to lock the profits, which means even if the stop loss is hit, I make some money. At least my brokerage is covered. Yes, definitely, Abhishek. So keeping a stop. I have not used Fibonacci retracement. See, I like to use things which are easy and like can be quantified. Okay. I have not used Fibonacci. You can test on that also. So first pattern we discussed is previous day high breaks and sustains. Second was previous day low breaks and sustains. Now it could happen that previous day high breaks and rejects, right? Candle could reject also. So what happens is, what is the setup? First 5-minute candle over PDH, but closes within PDH in next 3 or 4 candles. So logically think that was the resistance. It got broken and again it closed below it, which means it is rejected, right? So we sell below the PDH. The stop loss is above PDH. Why PDH? As I said, stop loss should be logical. Stop loss is above PDH because PDH is a decision point, right? Okay. So let's see some example. This is Bank Nifty. Opened with a gap up above PDH. PDH, the right DH in 2-3 candles short, stop, and Bank Nifty closed here. If I'd have sold a put option here, you see, future, I would have lost in future, but the put option would have given me money. Is it clear? See, these are logical patterns. Think in terms of logic, like why this. Yeah. So what happens is day high is broken, which means day high is broken, but day high market again closes below day high, which means whoever went long are now in losses. So which means all those who bought are trapped. That's why. Okay, sorry. Am I audible now? Yeah. So what I said is, till now we discussed two patterns: day high breaks, sustains; day low breaks, sustains. Now similar concept, day high breaks and rejects. So stock opens about day high and closes about day high in 3 or 4 candles I mentioned here. So what is, we short that stock stop loss about day high. Why about day high? Because day high was the point that made us, is a decision point. Like I said, stop loss should be logical. So then the trade goes in our favor, and then we discuss that we can sell a put option also if the trade is in our favor if you're shorting. So if you see, if you shorted here, the bank nifty was sideways for at least 2-3 hours. So the put option would have also given you money. If you don't want to, you can trail the stop loss also. So if, right, so same thing on the low side also, day low breaks and rejects. Yes, that's why I said a closing. What I said in this case, if I want to buy, I'll keep a buy above this high. But it never got triggered. Instead, the low got triggered and it's closing below PDL. I'll short. Sandeep, clear? Okay. So similar thing for the PDL breaks and rejects. Similar. So you see, it broke the PDL and immediately closed above it. So what is the concept? Buy after candle closes above PDL, stop loss slightly below PDL. You keep the stop loss below PDL, trade goes in your favor. You see the stock is sideways for so much time. If you had a sold option, we could have made captured time decay also. So are the 4 points clear? See, everything is built on logic, on what we have. So these are the 4 intraday patterns which we are using: day high, breaks, and sustains. See, basically in market to make money, see, basically there are bull or bears in the market. So we want to, whoever is winning, we want to be with them. Yes, all these are 5-minute candles. So whoever is winning, we want to be with them. See, day high breaks and sustains, bulls are winning. Okay, let's be with them. Day low breaks and rejects, bears are winning, be with them. Day high breaks and rejects, which means those who go, bulls are losing. Okay, let's take advantage of that. Day low breaks and again rejects. Okay, the bears are not able to make money. Let's take advantage of that. So based on that, these strategies are built, and these are specifically for intraday. And I came up with these strategies by observing intraday patterns for many years and tried to figure out what works, what not works. What if you get 20 different stocks shortlisting the criteria? Do you shortlist them? Yeah, you can do so. That I'll come to position trading, how to shortlist it. But I majorly do bank nifty only, so I don't have to worry about because see, I majorly trade only bank nifty. So bank nifty is, and I trade stocks certain. But yeah, I'll show you how to filter stocks. So basically, you can how to keep stocks in radar. That we'll discuss next. Is it clear now? All this you can backtest yourself. Let me see. I have some reports also show you. So see, you can see this. This is a backtest report for DHS long for bank nifty only. If day high breaks and sustains. So similar I have done for all. I cannot share the backtest, but you get an idea. You and I don't want to share also because I want you all to think on your own terms. Because see, when I get a trade in a I manage according to my style. I sell options. I do whatever I want to do. But this is the one. So there are similar like report for other strategies also. But basically, what I want is to do it on your own. How to create a curve like this. So this will do when we like do the Python classes. That time we'll discuss. So this is basically a equity curve. This is basically plotting the cumulative PNL. You plot the cumulative PNL, right? Okay. Now I told you about how to backtest. You can manually also do it, right? It will take time, I know. Those who, but it's fine, right? You need to put those. Suppose Nifty opened between PDA and Sandeep, I'll come to it. Don't jump to it. I'll come to it. Yeah. Okay. So yeah. So this we discussed. Now a lot of people are saying how to filter out stocks. Okay. First, keep the stock list of stocks which are in news. For example, tomorrow stocks in news, Reliance, HUL. Okay, news. At 9:20, see which are the top gainers and top losers of the market. Right? Right? Good setup in daily charts. How to come to the good setup in daily chart that we'll discuss. And on those stocks, look for these patterns and manage dynamically using options as we discussed, right? So what we will do is index is always there in the radar. We'll keep a list of stocks which is in our news. Okay, which is in news. Okay. And 9:20, we'll see stocks which are top gainer, top losers. Okay, let's keep them because we want for intraday stocks should move, right? We want the stocks to move. So top gainer, top loser is a good overview of what stocks are moving. Keep them in. See if any pattern comes. Okay, if it's coming, take the trade accordingly if it fits your risk to reward ratio. Okay, if not, then we can figure out stocks which are have good setups in daily chart. So I'll show you that. So now, how to filter out stocks? If you are paying attention in the start, what I have written, how to filter out stocks. I was talking about monthly, right? You can do the same thing in daily. Trend should be upwards. Okay, stocks which are in a uptrend in daily start, daily time frame in my radar. Near support, okay. They come near support, form a candlestick pattern in my radar. So these are in your radar. Additional RSI ADX you can avoid. OI data. OI data is basically option chain data. Should I explain option chain also? I don't know if people know or do not know. Okay, so I'll explain OI chain. Okay, so I'll explain that. So basically, see, you go step by step to filter out stocks in your radar. If I want to buy stocks, first the stock should be in uptrend. Simple, it should be about 20-day moving average, right? And I like to buy stocks which are 10 to 15% from 52-week high. If I am buying and short 10 to 15% of 52-week low. So the first filter is stock should be 10 to 15% on the 52-week high. If I want to buy. Second, trend should be upward, which means it's about 20 MA. If I want to buy, I need a logical stop loss. So in the daily time frame, I'll see it should be near support, near the 20 moving average or any support you want. You can use a horizontal support also if you're good at technicals. Then I want a candlestick daily chart. So if I follow just these three things, the stock is good in the daily chart. And if intraday I get a confirmation, intraday pattern, DHS breaks and sustains. So what I said, money is made when multiple time frames align, which means the daily time frame the stock is bullish, and intraday also pattern is suggesting it is bullish. I have a double confirmation. Is it clear how everything is linking up? So if you want to build a system, if you want to keep stocks in your radar for watch list, if you want to buy, keep stocks which are at 52-week high. Trend should be up. You want to buy near support. Wait for candlestick confirmation in daily chart. You can run a scanner. You can see which stocks are forming bullish candlestick pattern. Okay, you can use stock edge for that. Stock edge has already done it. Then next day you use intraday pattern on those stocks, which means the higher time frame is bullish and intraday pattern also suggesting the stock is bullish. So multiple time frames are aligning. And two other factors you can use is the OI data and futures data. So I'll just give you a concept. Till now, is it clear? Like how are we building the watch list? Abhishek and people who are asking. It's similar to how we are building the investing watch list. We want to be with the strongest stocks of the market if we are buying. And daily time frame, it should be bullish. So intraday confirmation will give you more confirmation, right? So now, so I think this is clear. Now let me show you what OI. I'll just give you a brief concept what it is. You can see daily time frame is a daily time frame. How many days as in? Yes, just one thing to know. For example, spot is around 9,000, 10,000 lakhs collar ordered on 9. So should we take it to bearish or bullish? Please cover when you cover OI part. Yeah, I'm covering OI part only. So like I didn't get your question. Daily time frame bullish for how many days? Daily is daily. So like you can use 365 days. So just let me give you a concept what it is. So basically and how I interpret OI. So basically what happens is there are FIIs in the market. You all can see the OI chain, right? You all can see the OI chain, right? Yeah. So basically what happens is, for example, this is Nifty, right? You can see there are strikes. So what happens is at each strike there is some OI. But out of these each there will be some strike which will have the maximum OI on the call side, maximum OI on the put side. So for example, Nifty is at 9859. So let's see the call side, 9859. So you can see here 10,000 OI, 25 lakhs 40,000. So this OI, so 10,000 call option as the maximum OI, which means people in the market, FIIs and all big players assume that this market won't go above this level. So which means this OI will act as resistance, which means 10,000 level people are expecting market won't go above this because it is the maximum OI. So this also acts as resistance. Okay. Okay, let it be like we are discussing for yesterday. For example, okay, let's do it May only. This also 10,000 as the maximum OI, 9 lakhs on the call side. Let's see on the put side, 9,000 25 lakhs. There are tools for this. I give you a link. Can we see? Yeah, this is May only. So on the put side, 9,000 is the maximum put OI. Call side 10,000 is the maximum call OI. So what the option writers feel is that the market in May, as per current data, will be between 9,000 to 10,000, right? That is what the option writers believe. So for example, if you are building a strategy, look for additional confirmation from OI data. For example, if you are shorting Nifty, your stop loss is 10,000 and you see that maximum call OI is also at 10,000. This gives you additional confirmation that what you believe, the market participants also believe the same thing, right? Till now, is it clear? So basically, OI is to be used, for example, on the put side, wherever there is maximum OI, it acts as support. Call side, wherever there is maximum OI, it acts as resistance. Okay, if anyone follows me on Twitter, I'll show you one thing. See this? This I had posted on 29th April, one day before expiry, Wednesday at 2 p.m. Nifty is at 9,500. This is the OI chart of 9,500 C and P. Both side OI getting added. Crossover of this will decide the next move. So what was happening is, it was Wednesday. Nifty was at 9,000. So if Nifty is at 9,500, call OI is also increasing, put OI is also increasing. One party has to give up, which means what is happening? Call writers believe that a market will stay below 9,500. Put writers believe that it will stay above 9,500. So what I said, the crossover. So what happened is, you can see this, right? At 2:35 a.m. on Wednesday, the put OI crossed the call OI. The put OI crossed the call OI, which means, and you see the call option started falling. The call OI started increasing, which means the call writers who had sold the 9,500 call started covering. OI will reduce, start buying the sold options, right? But the put OI started increasing. So this gave a clear indication that the expiry will be on the upside. Right, so what I've given, a day prior to expiry, OI data helps in prediction, give directional insights. So what happened is, basically, if you think logically, what happened? I've mentioned the logic also here. Closer to expiry, ATM options have highest gamma. ATM options have highest gamma closer to expiry. 9,500 was ATM. But what happened to this OI writers? As market started going above 9,500, they started losing money. So they started exiting the position, and this led to a short covering rally. So this rally was totally a short covering rally. It does not imply Nifty is bullish. But if you followed this data, you could have used it. So basically, you can use this to get some additional insights. You should not use this as standalone thing. You should use it for additional insights. So is the concept clear? So max OI, call OI is used to find support resistance. But closer to expiry, if at ATM strikes, there's a crossover, which means one party is winning. So what happened is, put writers are winning, call writers were losing. So call started writers covering and started covering, and market next day opened with a big gap up. Is it clear what I just said? You can refer my tweets if you want to but is it clear? I think I expect everyone to know what option chain is. Yeah. Okay, someone selling tool. So this is a paid tool. OI monitor, iCharts is the site. See, it shows. So if you see yesterday also, what happened is, when I was trading Bank Nifty, market opened with a gap up, right? So what happened is, this at this time, for example, at 1:50, 2 p.m., the call OI was at a day high. 20,000 call OI was day high, which means the call writers were confident that the market won't fall, the market won't go above 20,000, because in spite of the gap up, the call OI, you see from the morning, market Bank Nifty opened gap up, the call OI of 20,000. Bank Nifty even reached, I think, around 20,000, but the call option OI was increasing. In the last it decreased because they had to close their position. So that is just the expiry closing. So this also gave an indication that, okay, how should we use OI to find out direction? Yeah, I'm coming to that. We show for any stock. See, stock I don't use OI much. I use only for index. So what happened is, so if you think logically, stock price is going up, but call OI is also increasing, which means the call writers believe that Bank Nifty won't cross 22,000. See, those guys who are selling these options are smart. They know that Bank Nifty won't go about 22,000. So if I wanted to sell option, I would have sold 22,000 option for the expiry day, and eventually it closed worthless. How do you select strikes to monitor? I select the strikes which are round number or ATM, and strikes which I have, for example, 10,000, 9,000, where the maximum OI is there. Okay, yeah. Should we use OI to find out the direction? No, not. See, what I said is, you use this as a confirmation. So if you read my tweet, what I said is this. Let me show you the tweet. This tweet I did on Wednesday at 2 p.m. what does it say? Both side OI getting added. Crossover of this will decide the next move. As soon as the crossover was done at 2:35 p.m., the move came on the upside. So I use this as an additional confirmation. I won't trade only on this, but price was also going up, right? So see, you don't have to go much into OI. It's fine. Like first follow price, what the price is saying, and then use this as an additional confirmation. If you are shorting a stock, if you wanted to short Bank Nifty, for example, around 20,000, if a bearish pattern is formed, and you see OI is also maximum, you can short Bank Nifty. That's what I'm trying to say. Use this as a confirmation. Don't use it only as a sole system, right? Yes, OI crossover is more useful before expiry. Think logically why. For example, 9,500 crosses like 10 days before the expiry, 15 days. What happens? These OI writers have still time, now 15 days to get Nifty down. But if it is happening in the last day, the gamma is against them. They don't have time also. They'll panic and exit. So I have built a system on that, when to buy. So when to buy, this is the only time we will buy options. So that we will discuss tomorrow, when to buy options. We want to buy options when these writers panic. So we will come to know how are they panicking. So yesterday at 2:35 p.m. I was clear that Bank Nifty would open with a gap up because these writers were panicking, right? Is it clear? Yes, OI crossover is more useful before expiry, Sandeep. Yes, because closer to expiry, the gamma risk is the highest, and you want to give this option writers will panic only closer to expiry. If there's much time left to expiry, they have a lot of time to manage the trades, right? What they can do, they can buy futures. As I showed you how we can adjust the trades. They can still adjust the trade, right? But closer to expiry, they don't have time to adjust the trade. Gamma will come into action, exit the trade in loss, right? We want to take advantage of that. So we'll discuss a buying system tomorrow. Till now, is it clear? See, I don't want to go much detail into options, option chains. I think this is pretty simple concept. Yes, I bought call options. Yeah. But I exited intraday only. I didn't carry it. This is applicable to any in the last week of the expiry. I'll discuss the system tomorrow, like how to do. I'm just telling you how to use it as an additional confirmation. See, whatever you do in trading, it should be based on logic. So the logic is simple. So this, I observe the logic. I'll test this logic. Okay. Is it clear? So how to find out stocks for our watch list? First, the trend should be up in the daily time frame. It should be near support. A candlestick confirmation is formed. Okay. So daily it is satisfying all our criteria. But intraday we want to buy. But if you buy in a daily time frame, the stop loss will be the below the candlestick low, daily low, right? That is a big stop loss. Intraday, a DHS pattern is formed. Stop loss is smaller. Additional confirmation also, right? You see OI data also. The stock is going up. OI data is also decreasing. Oh, additional confirmation, which means the call writers are covering, right? You can do the same thing in futures data also. If the future price is going, the same thing, for example, the same thing for futures. If price increases, future price increases and OI increases. Replace volume with OI, which means smart money is buying. So what, for example, if you're buying a stock, the price is increasing, right? If you see OI is also increases, additional confirmation. This is future OI, not options OI, right? Is everyone getting it? How are we using additional confirmation? But first thing is price, everything else is secondary. First, if you want to decide a watch list, go to the daily time frame, find out stocks near 52-week high, in uptrend, near support, candlestick confirmation in daily. Okay, keep this stock in radar for next day. Any intraday pattern form, take the trade. Stop loss is also smaller. See what is happening on the futures data once you take a trade. But use this futures data, OI data only for confirmation. Else you will be confused. Use only for confirmation, right? So similar to, so now we again come to this. So what do we do is list of stocks in news, top gainers, top losers, good setup in daily charts. Clear how to find good setup in daily charts? what we do intraday, look for patterns, manage dynamically using options as we discussed. On Thursday expiry, if you got direction as last week, it is, see, overnight if you are carrying, see, it depends on the risk to rewards. If you are selling put in on Nifty, that day 9,400 put was available only for 12 rupees. So I can get only 12 rupees, but if I could have bought the 9,500 call, it was available at, I guess, 50 rupees. So I can, but the reward is much better. So, but I am talking about intraday. I don't like to buy options and carry overnight. Yeah. So is it now, is it clear how to create a watch list? So these patterns you have to do on the watch list you have, and watch list will change every day. See, in intraday trading, it's important to find stocks which are moving. Most of the time stocks don't move only. So if you buy any random stocks, it could have happened with you that it will hit your stop loss, neither hit your target. It will do time pass only. So you have to be with stocks where majority of the people are interested. Clear, right? Does anyone want a break? Because I think more 30 minutes and then we'll more 20-30 minutes and then we'll be open to questions, right? Anyone wants any break or should we continue? Continue. Okay, right. So, okay, Sandeep was only asking this, right? Market opens within previous day range. So we discussed what happens if market opens outside the range, what happens market closes. But what if the opening is within range? This is a violin plot. I'll explain you what violin plot is. So when market opens within previous day range, chances of range bound. But breakout can happen anytime during the day. Does this answer your question, Sandeep? So how to trade this, I'll discuss tomorrow. I have a special session only for how to trade Bank Nifty on this. So what this violin plot tells you is whenever the range is open is within previous day range, PDR is previous day range, between previous day low and high, which means the closing is almost also around those levels only. The distribution is around those levels only. You see the tails are very few. Majority 80 to 90% of the trades are between +2 to -2%. Right? So this is the time if you want to sell options, this is the time you sell options. Rest time you trade directionally. But if you want to sell options in Bank Nifty, you can do. I sell always. I'll show you how do I sell always. But is it clear? So we discussed what. So this I have tested also. You can see from this graph. You don't need to look at the chart of this. You definitely have to look at the chart. So that we'll discuss tomorrow. Like if you see, I've discussed tomorrow how to trade Bank Nifty. Like I dedicated 1 or 2 hours on how to trade Bank Nifty only. Right? And yeah, someone asked why Bank Nifty, not Nifty? Because see, Nifty does not move very fast, so the premiums are also less. Bank Nifty is volatile, so the premiums are higher. But I know how to manage that risk. So the risk is higher in Bank Nifty, but the reward is also higher. So that's why I trade only Bank Nifty. I trade Nifty also. It does not mean I only trade Bank Nifty. Sometimes I trade Nifty also, but I like to trade Bank Nifty. Because for Bank Nifty, I have data for 4 years, so I have tested on 4 years. On Nifty, I have weekly data only for 1 year. Nifty weekly started last Feb only. Bank Nifty is from May 2016. Weekly options. Is it clear? Yes, concepts are universal. You can apply it anywhere. Anywhere you can apply it. It's not like it's applicable to Bank Nifty. See, theta, decay and everything, it's all a universal. Concepts can be applied to any stocks, anything. Yeah. Yes, this is applied to all stocks, everything. So if market opens within PDR, it's better to create short straddles, but only for index, because index are liquid. In stock options, the liquidity is slightly lesser. Right? So how do we trade this? That we will discuss tomorrow on how to trade Bank Nifty specifically, or index, I would say specifically. But one thing is clear, that if market opens within previous day range, it is better to create straddles or create a non-directional view. And when the day high, day low is broken, we'll see how to adjust the trade. That we'll discuss tomorrow. Sandeep, does it answer your question? You were asking the same thing, right? Yeah. Okay. Let me see what is left. So this I'll come back to it. Wednesday position in Bank Nifty. So now let's. So how do you develop a trading plan? See, we discussed about developing, for example, systems and all, but you should have a trading plan also. Once you backtest your system, okay. So first you decide what is your trading capital. Okay, you are trading Bank Nifty with 20 lakhs. Okay. What is the risk per trade you want to take? 1% of capital, which means if I lose 20,000, I'm out for the day. Instruments you want to trade, you can use anything. You can trade index, or you can filter out stocks bullish or bearish in the daily time frame. 5-minute time frame, you can trade any time frame. What is the setup? I discussed many setups. Okay. What is the logic? It's clear. How I exit, it's completely clear. What all tools I will use, it is clear. Emotional control. Once you take a trade, don't remove the stop loss at all. Stop loss, let it be there. If the stop loss is hit, it's fine. You have to follow your systems. Record keeping. You have to note each and every trade, whatever you do. I'll share a simple trade journal also with every one of you all. So as a good trader, you have to constantly evolve. Does not mean, okay, I showed you this system. If 6 months from now, I could be trading a completely different system, because I constantly keep seeing how the system is performing. So you record keep. Basically, you keep noting your trades, and Saturday, Sunday, you see what happened due to in the entire week. Did you even lose? Your losses should be capped to what? What should be your losses capped to in terms of R? Max loss in terms of R in a single trade. -1 R, right? -1 R in terms of R. That is the max you can lose on a trade, right? You should, if you lose more than 1 hour on a single trade, it is very difficult to make that money back. So when you review your trades for the entire week, see, did you follow your plan consistently? For example, your stop loss could have been 100 points, but as the market was falling, you removed your stop loss and you exited at 200-point loss, which means your loss on the trade is -2 R. So you have to see, did you like exit at the right? Did you like, were you able to make good profit? Did you follow your plan consistently? Is it clear? I'll share a sample trade report also with you, trade journal. But as a trader, it does not mean it's just not buying and selling. It's about introspection. After the market closes, what do you do? How do you see? Okay, what did I do today? Okay, I bought Bank Nifty. Okay, follow the plan. Yes. Yes or no. So you'll, after series of trades, you'll be a better trader. So this is very important if you are trading. See, trading is a business. It is not just buy and sell. It is a business like any other business. But so that's why when you take a trade, have a plan. If you don't have a plan, you will freeze. If you buy Bank Nifty has fallen even 1,000 points in 5 minutes, right? Flash crash. That can happen. You don't have a plan. Oh, you will be stuck in front of the screen. Capital wiped out in 10 minutes if you are trading on leverage. So as a trader, think in terms of risk. Think what will happen if something happens. What will you do? What is your plan of action if Bank Nifty goes up, goes down, stays sideways? Everything should be in clear in your mind when you are taking a setup. So you know what your capital is. See, everyone has different risk appetite. So everyone will trade as per his capacity. What is the risk per trade? What instruments you want to trade? What time frame? What will trigger your entry? How will you exit? What all tools do you require? For example, iCharts or any other tools you want to use, like Zero the Kite for charts, Trading View for charts, whatever you want to use. Emotional control. We'll discuss on emotional control psychology. I say that is a very important factor if you want to be a successful trader. And record keeping is equally important. You have to note your trades. If you see, like, these patterns I have built because I have stored charts for last 5 years to figure out what is working, what is not working, and then eventually try to filter out things which I feel are working, then back tested it. Sharp ratio is simple. I think it is basically risk minus risk-free rate divided by this standard deviation. So I'll give you the formula for this. I think this is the calculation can be easily done, and that will, when we do back testing, we'll discuss that. Is it clear? Okay. So this is also very important, developing a trading plan. People think trading is easy, just buy and sell. I'll come and I'll buy, I'll sell. No, it is much more than that. Buying, selling is, I would say, not even like it's a very small part of trading. Other factors contribute more towards your success. So record keeping is also very important. Yes, Rajesh, that will do in the class. Don't worry. Okay, so what is my trading plan? So this is specifically in terms of index. I'm telling you. Yeah. Rajesh, the session is still on. Thank you. But yeah, it's still on. I think. Do you want me to end it? Like, is it too much? Okay. Yeah. So what I do is, so I'm talking specifically in terms of the index. So before the market opens, I like to see a overall trend. I can use the 1 hour chart. So I'm trading the 5 minutes. So I see the overall trend in that 1 hour chart and the daily chart. Okay. I just try to see what the market is. Is it trending or range bound? If it's in range bound, I try to figure out the boundaries. For boundaries, I use the OI data I can use, right? I'm just giving you my plan. It's not a trading strategy. So if the market is trending, what I do is I look for rallies or dips to act. For example, if the market is uptrending, I look a pullback toward a moving average to buy the markets. Right? Look for candlestick pattern at right locations. Right? So this is my like one before the market opens, what I do in Bank Nifty, I mark previous day high, previous day low. As soon as the mark, I at the open, I know if the open is within previous day range, I am sideways. If the opening is, if it breaks a day high, day low, I have a view, right? Then I see if it is sideways, what is the range that we'll discuss tomorrow in detail. How to trade Bank Nifty. If it's trending, I try to act at rallies or dips, and look for candlestick patterns right location. See, as a trader, you should just have an overall sense of a trend. See, most people lose money because if a stock is up 5%, they'll try to short it. If you see, I only buy stocks which are up more than 5%. I generally in my watch, if you see, stocks I bought when they were 4% up already, and I closed at 9%. So you don't have to short a stock because it's 4% up or 5% up. That's the mistake I used to make earlier. Like I used to look for stocks which are top gainers to short them. So you have to, so you know now how to figure out a watch list, but you have to follow patterns, manage your risk. How do you use moving averages in trending day? See, yeah, I'll show you tomorrow, Sandeep. So basically, I use a 20 moving average in intraday in 5 minute time frame. 20 moving average. If it's a trending day, it holds for the entire day. So we'll discuss this tomorrow in detail. How to trade Bank Nifty. One. So basically, additional things to look at. See trend, how strong. As I said, in intraday we don't use indicators. Why? Because by the time the indicators give you signal, the move is over. So the trend strength I look is if the stock holding 10 MA or 20 MA. If the stock is holding 20 MA, it's a strong trend. If it's holding 10 MA, which means it's a very super strong trend, right? I like to exit when the trend matures. So any stock, if you understand the concept of mean reversion, stock goes away from the moving average, again reverts back. So if I get back to back 5 or 6 candles in my favor, like back to back green, 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 which means it is very far from the moving average, then I bar by bar. I'll show you one example. And timing is important. If I'm trading directional, I'll trade between 9 to 11 and 2 to 3. Everything is 5 minute time frame in intraday for me, right? What I said, and then exit if big bars in favor. If I'm buying Bank Nifty, I get 3-4 bars in my favor, I'll exit. Or I'll trail the stop loss very aggressively. Or I'll exit if the day low, day high taken out, rejection or any rejection candle. So basically, once I'm in the trade, for example, DHS patterns found, I'm in the trade. The trade is going up. I see 20 MS holding, so I'll trail the trade using 20 MA. But at 20 MA, I see back to back 5-6 green candles are in my favor. I'll exit the trade, or I'll move the stop loss bar to bar. If you are trading directional, it's better to enter the trade from 9 to 11 or 2 to 3. So yeah. So you trade most of the strategies manually. Bank Nifty I trade manually. Rest everything I automated. Bank Nifty I like to do it manually because I trade using options. So options, automating on the options is very difficult because there are a lot of certain factors which affect the option pricing. No, can we reduce noise with Hikonashi? No, Hikonashi I don't use it because see, pure form of price is candles. So use candles only, right? Hikonashi is derivative of again price. It will take, it will give you late signals. Rajarshi. But we have to do prior research for momentum, right? What prior research? Yeah, moment. Yeah, I said right. So Bank Nifty is different. So I am talking about stocks. Stocks. You have to. You already researched, right? Bank Nifty I trade day in and day out. So I'll discuss tomorrow how I trade Bank Nifty. Index how I trade is different. How I trade stocks is different. Any which I don't use any indicator. You can use open only. Use open only. See, indicators I don't like to use much in intraday trading specifically. Expiry, no, tomorrow there are a lot of different things which we will cover. Expiry trading, Wednesday positional strategy, how to trade intraday Bank Nifty, risk management, money management. There are a lot of things to be covered. If open interest concentration indicates why are, or rather who are people on the opposite that is buying those options? Very simple, right, Shreyan? Those are retailers, right? You are getting that option at 10 rupees, 5 rupees. They like to buy. They think it's a jackpot, right? Markets exist because people with different opinions exist. So they think, okay, my risk is only 10 rupees, but if I go right, I can make 100 rupees, 200 rupees. So that's why it's not only max at every strike, right? Every strike, there's a buyer and a seller together, right? So the buyer thinks that a big move will come, seller thinks it won't come. And seller, for selling, you need big money, but for buying, you don't need any money. You need very small amount of money. So they think if they buy, they can make quick money, very big amount of money very quickly. So that's why they buy. Because expiry trading, the concept is similar. You can apply in Nifty, Bank Nifty, anything you can apply. First, we will be knowing the concept and then we will be automating it by logic, right? Sorry, I have not completed previous recording. Rajesh, this is completely independent. Yeah, you will be back testing in the Python class, Rajesh. Yeah. Do we get change in OI real time on eye charts? Yes, Deepak, you do get. So the time, the frequency similar to NSC. NSC also takes some time to update the data. Same similar with this eye charts. See, eye charts is required only if you trade the index extensively. Else is not required. I trade index very extensively, so that's why I use eye charts, and I use something called as the combined straddle charts that we will discuss tomorrow. Right? Momentum trading in detail, please. Is it positional or intraday momentum? How you identify and results? I didn't get your question. Momentum trading I already discussed, right? This all is momentum trading only, right? EDL break. So basically, you see your daily setup and you enter the trade using these patterns. Positional trading we'll discuss tomorrow. All I discuss is about intraday trading today, Sandeep. Results I showed you of DHS and like 2-3 patterns. See, results you have to backtest yourself. I gave you a concept, entry, exit logic, everything is there. Abhishek, next, I don't know what is there in 7. No. So momentum is basically, see, momentum basically is very quickly, and so basically top gainer, stop loser, I would say there are momentum. So we are doing that only in intraday. So intraday, two things can happen. Stock can remain sideways or stock can go one way in one direction. So we discussed 4 patterns and we discussed also that pivot system, which we can try to capture momentum. But what we are using is, we are not doing on any stock. We are having a watch list one day before. And if we don't have any watch list, we'll see the top OI gainers, top losers, stocks in news, right? And we'll look for these 4 or 5 patterns on these stocks. Is it clear? So what is happening is the daily time frame is with you, and you're taking additional confirmation in the smaller time frame. As I said, big line. Clear to everyone? Yes, the Sandeep. And if it does not open in the, if it opens within previous day range, we'll create shadows that we will discuss tomorrow. Why are you trading in BNF, not in different, are adjustment easy in BF? No, adjustments are difficult in BNF. I said, right, I'm trading in BNF because in BNF the premiums are higher than Nifty. So I am willing to take that. But in Bank Nifty, the reward is higher, the risk is also higher. So it depends. You can trade Nifty also. I like Bank Nifty, and I've done my studies for Bank Nifty. And as I said, Bank Nifty data is available for 4 years for weekly data. Nifty only 1 year. So it's better. I get a better idea of my strategies on Bank Nifty. Push, is it clear? For investing, we use ADX, RSI for momentum, but on intraday, we use top gainers because indicators too low. Yeah, right. See, as an intraday trader, only follow price. If you follow anything else, you will get confused. Just follow the price. Price is the leading indicator. By the time the indicators give you signal, the movement will be over. No, intraday triangle, inverted triangle, no, now not. Earlier, when there was the STT effect, it was very good. Like we used to do it daily. But now the STT effect has gone. Like those who trade Bank Nifty, they must be aware about the STT effect. So that time it was very lucrative, inverted triangle. Now I don't think it's much lucrative. No, Deepak, no. Inverted triangle you shouldn't do. You should do triangles only if you have a sideways view. That we'll discuss tomorrow. Bank, don't worry. Tomorrow, how to trade the index, that we'll discuss. How to trade Bank Nifty, if it's bullish, bearish, sideways, how to trade Bank Nifty or even Nifty. See, you all can trade Nifty also. It's fine. Concept is same. Right? So see, now I have to discuss a Wednesday position strategy, but I think I'll do it tomorrow only. For catching momentum for positional trading, then what should we use? You can use the same thing which we discussed, right? Uh, the stock should be in daily time frame, should be simple. This you can see this chart. List of stocks, bearish, create risk defined strategy as per view. Look at OI chart for manage the trade. You can read this. I think it's similar only. See, momentum is basically, like I try to catch momentum on the intraday time frame only, because for positional I would like to create risk defined strategy. I don't like to capture momentum for positional. And even if you want to capture, you can create a risk defined strategy, right? You have a view, you can create a risk defined strategy, look for OI chain, future OI for additional confirmation, manage the trade needed, and do it into multiple stocks for prudent risk management. Is it clear? See, tomorrow we'll discuss how to generate like positional income, monthly income strategy. Then we'll discuss a strategy on Wednesday, which you can do on Bank Nifty, like sell at Wednesday closing, exit at Thursday open. How to trade intraday, we'll discuss. Two strategies. Then we'll discuss on risk management, money management, then certain case studies. Can we get probability of index this valent lot if it happens? Yeah, probability you can get if you backtest it. Okay, so now let me just quickly review of what we did today. I know it was like, was it too overwhelming? Yeah. Jigar, tomorrow we'll do straddle triangle extensively. Don't worry. That's what I majorly do every day. So we'll discuss that tomorrow, how to do straddle triangle in Bank Nifty. Jigar, I don't want to do it now because that takes too much time also. So I want to start it fresh only tomorrow morning. Yes, I'll discuss that in detail tomorrow. Continue for other 3-4 hours. How to find sectors which will lead the bull will be the best in the bull market. I showed you, right? Investing, what all sectors. Okay, let me just go through this quickly. Then I'll. Okay, so Purvi, first thing is, just let me show you this image. What one thing is clear is a sector does not, a stock does not lead a market, a sector leads, right? So if you run that scanner and if you see multiple stocks from the same sector are coming, which means that sector has a high probability to lead the bull market. See, you cannot, and we can be sure only of the after a certain time. But what we can do is we can select stocks only those are in that watch list. For example, 40 stocks are there. We want to figure out the best 10 using fundamental additional fundamental analysis and be with those stocks. So which means even if you're going wrong, you're companies and you will exit if the stock falls a lot, right? As per, like, if you, I can see that pharma stocks are there in the list. Many pharma stocks are there and they almost went up 100%. And it, see, I can be wrong also, but you can see that pharma was the leader in 2014. For last 6 years, it did not perform only. Stocks are at the same price, right? So it is a high chance that pharma could lead. And we have some positive news also of the corona and all, like positive for the pharma sector. Yeah, it could be anything. See, I am not a fundamental expert. I don't invest at all. I keep my money in FD and pledge it for trading. I don't like to invest because I don't have the temperament to hold to stocks for a longer time frame. If I'm bullish, I'll directly buy in futures. I had posted a trade on HUL also. I bought HUL at 2,300 and like so I like to buy. So basically, if you want to invest, you can run that scanner. You can figure out the stocks which are coming in. If you see certain names from like same sectors popping up, which means chances that sector has a high probability to lead the markets, right? So I'll show you 2-3 charts. So even if you see like Asian Paint is looking pretty good, and see whatever I say, you have to do your risk management. Does not mean if I say Asian Paint, you go and buy Asian Paint. So see, one company, just it came to my radar recently only. See, this is a 103-year-old company, and you see this stock from 2015 it was sideways, and now it has hit a new all-time high, which means it has a high chance that it can also perform well if the pharma sector does well, right? It's a good company fundamentally. I have the report also. Wait, I'll show the report also. Wait. That's why I don't like to give any recommendation, because what I do and what I trade is completely different. You all must have seen I was bearish on Bajaj Finance heavily, but I went long intraday for 2 days because I like to do what the market is saying me. I don't have any view when I trade the market. If the stock is going up, which means I am bullish. If the stock is falling, I am bearish. Simple. So okay, but don't take this as any recommendation. I'm just showing you on Alembic. This is a report like done recently only. See, it's a established in 1907, which means it has a for 100 years a company is there, which means definitely company is doing something very good. Okay, let's see. You don't do any mean reverting strategy. I do, Ashutosh. I do pair trading, but that is like more, I would say, more statistical in nature. That I do in the Python course. I don't do in this trading course. I do something called as pair trading. I'll show you an image also for that. So if you see this, yeah, Ashutosh, I do. I use even half-life, mean a lot of factors I use. I'll show you after this. So if you see this stock, SSGR is also very good, which means factor which I look at. And if you see the final, this, most of them are green, right? CPAT is approximately equivalent to CFO. SSGR is good. Sales growth is greater than peers. So overall things look good in this company. Plus it has come in a radar also, right? So if you do this fundamental analysis, you'll get additional confirmation. You can buy this book, right? It does not cost, I think, 2,000 rupees only. I cannot share because I know Vijay Malik personally, and it won't be right if I share the book. I have the PDF, but I don't want to share it. But you can buy it. It's like not expensive also. I think like 1,000 or 2,000 rupees. But see, if it's in the radar and if the company is looking solid, it's a good chance, right? We can go wrong. It's fine, but chances of making money is higher. So would be similar to this analysis you can do for other stocks also, right? I am not much into fundamentals, but you can follow systems, right? You can follow systems, you can figure out. And I think Soumya is your brother, right? So he's already doing into investing. So you can combine both and do it. Yeah. So yeah, so he's already doing it. I think he's doing a webinar also recently. So you can combine both. So you'll get a better perspective. We can see the fundamentals of the companies in the book. Yes, Rajesh. You cannot see the fundamentals of the company. They'll give you a framework. You'll have to research on your own. Yeah. So the fundamental is not a part of the course. That's why I'm not touching much on the fundamentals part. But as I said, everything should be data. If you see the fundamental checklist also is completely data driven. Yes or no. It's not like, it's not gray area. It's either right or wrong. Right? So just let me quickly just review what we did today, so that if you have any questions, again, you can ask. I'll just do it very quickly. So first we started with the story of Raj. That's how majority of the people approach the markets. We realized that one important point is a good company does not mean a good stock. So we cannot only rely on fundamentals. So we figured out how does the casino make money. So to make money, we need to be the casino. First is build a system with a statistical edge. So now if you see, if you test your strategy, the accuracy is good. For example, even if it's 60%, you can use options to even increase the strategy ratio from 60 to 70, right? Which means even if you're going wrong, you're not losing money, right? If you use options properly. Then we saw that exploit the edge, which means back to back 7 trades can also go wrong. That's why you do not judge the system on 2 or 3 trades. You have to take good number of trades to be able to judge the system. Win big when right and lose small when wrong, which means losses should be -1 R, profit should be greater than 1.6 R. Why 1.6 R? It is calculated statistically. Why do most people lose money? I think it's clear. We spoke about it. So yeah, one important point from this slide is no matter what the market is doing, there's always one sector which is in its own bull market, right? And a stock does not lead the market, a sector leads. So if you see 3 or 4 stocks sitting together from the same sector in your watch list, it could be that that sector could lead the market. And when the market is in a bull run, don't look at valuations. Can you capture 300x if you look at valuation? After 10x, it is expensive, 20x expensive, super expensive. That's why if you see, I don't give importance to valuation. It's my style. You all can do want to do, but I don't like to give importance to valuation. I will trail using the RSI I showed you, but I don't invest. But I'm showing you why I don't give importance to valuation, because the stocks which show the highest, Oro Pharma I showed you, right? It was overbought for 8 years, but 70x. So that's why sector. So basically, stock does not, no matter what the market is doing, there's always one sector which is in its own bull market, and the leader's name keep on changing. So we want to find patterns which are similar, and I told you how to do that. This is a budget data we discuss in detail. So this is some data analysis. So why to use it? We spoke about trend, how to objectively identify. First is trend depends on your time frame. So to make big money, you need majority time frames to align. So how are you using it? We are using daily time frame and using intraday patterns on stocks which are bullish on daily time frame. So you're getting additional confirmation. So moving average, we will use only to identify the trend. That's it. No crossover, nothing. These are all lagging things. Does not make any money. Resistance support is fine. Stop loss, the most misunderstood concept. It is that support resistance which, when breached, has the potential to change the trend of the time frame. Change the trend of the time frame. So if you want to keep a stop loss, it should be logical, else don't keep it. Don't keep a affordable stop loss. I'm repeating for the nth time. That's the worst mistake you can do as a trader. Stop loss should always be logical. If it is a big stop loss, quantity, but the stop loss will be a logical stop loss. Okay, understood how are they formed? So basically there are zones, not exact points. Earlier support acts as resistance, and more time it is tested. In case of horizontal support, weaker it becomes. I explain how why that also happens. Candlesticks, you don't have to remember any hammer, bullish, harami, whatever it is. Don't have to remember any names. Just have to see who is winning, who is losing. But candlestick is important at location. If you trade each and every candlestick, it's impossible to make money. First is trend, then support resistance, and then candlestick confirmation, right? Then we figure out indicators. Why? Because Reliance did not move for 8 years. So we need something to which tells us stocks which will move. Okay, let's look at RSI. RSI greater than 55, buy, which will filter out stocks which are not moving. Okay, but RSI greater than 70, people try to short. We won't use that. We will only use at that to exit our trades. We will be cautious. So if RSI is moving below 70 after a long time, we will try to exit the stock, but we will be with the trade till the time it's above 70. I showed example of Auto Pharma and other stocks also, right? Okay. ADX, it is used for tell you the trend strength of the trend. You can use it as additional confirmation. Indicators are used as additional confirmation, not to be used as sole system. You can use that, but the accuracy is lesser. Volumes, I would say it is more applicable to trading, not for investing. But yeah, if volume is greater than average, this is the same concept. You can replace volume by open interest. The concept is same. You saw that even by following a simple strategy, Raj could have exited trades. Then we spoke about how CAGR is important in making money. So first is buying the right stock. So first we have to figure out what we want to do with the stock. Now we know, okay, from these 40 list, I want to just buy these stocks. But where do I buy it? Do I buy Asian Paint at 1900? No. I know my stop loss, so I'll buy when the risk to reward is in my favor. Okay. I will abort stocks which are not performing. Stocks which does not move for 1 year, 2 year, I'll exit. Or stocks which RSI is condition not set, it won't come in my radar. I'll exit at right time. How? Right time, you cannot predict the top or the bottom. Impossible to do it. No one can do it. Okay, but if the momentum is losing, the stock is coming below 70, we will get an exit. It will give you a better exit than a moving average. Moving average will give you a very late exit. So we will exit and we'll rotate to new trends, right? I showed you that image, like how does each, after like in bull market, the sectors change. So we make money, exit, and go to a different sector of stocks which are leading the market. We don't want to buy and hold. Buy and hold works only in very few stocks such as Asian Paints or like which have like consistent compounders. Right? Keep this slide in mind, how to achieve high CAGR. Okay, then we discussed what to do. Okay, now the concepts are clear. If I want to buy, trend should be upwards, right? It should be near support. It should be a candlestick confirmation. Additional is intraday. So from the first three, we are building a checklist for next day. Intraday patterns. Okay, now we have a trade. You can use OI data. Yes, Rajesh, slide will be shared. So OI data you can use, and futures data you can use additional confirmation. OI data, I showed you how I use option chain. Future, I don't want to go into the detail that you can read, but you can like that is to be used as additional confirmation. Futures data also showed you similar to this only, right? So this was the investing checklist. Other data points I told about voltas or anything like data with data that could lead. For example, if you're investing in the pharma sector, we see some positive data also that could boost the pharma sector. Okay, that is an additional data point, right? And no matter how much study you do, stop loss is a must. So after this, if you're doing investing, do a fundamental analysis and then filter out the best 10 stocks. Back testing, I think discuss how to do back testing. You have an entry logic, exit logic, stop loss, risk per trade position. And back test is very important if you want to trade huge quantities and if you want to have confidence in your system. Without back test, if you see this as 6 to back 6 losing trades. After fourth trade, I will be like, should I trade the system or no? If I don't back test it, but if I back test it, I know okay, this system has a good equity curve. I want to trade this. But so in back testing, don't look at the winning ratio. Most people try to do it, which is very wrong. Look at the look how the equity curve is the drawdown as per your risk appetite, and then only trade the strategy. Then we discussed about, so this was just before the break. Till now, any questions? I think there shouldn't be any questions, right? Any simple questions also fine, like before this. See, because I am only covering the advanced concept. I must have not even covered some basic concept. Till now, is there any question like in the revision? Like you can figure out, right, how to even uh, uh, figure out stocks for the long term. Like you can combine fundamentals also for the same. How to use skew in trading? I don't use it much. You can use volatility skew if you want to trade options, but I don't use it. Okay, so no, okay. So then we discussed about event trading. The concept was simple. We want to capture on the volatility crush, and why does volatility crush happens is using there's some implied volatility. The premiums, like on the basis of the premiums, we can calculate implied volatility using reverse engineering and Black-Scholes. Historical vol is how much does the index, the stock moves historically, and what happens actually. So if the actual movement is less than implied, we can make money. So basically the vol drops, and we use this around events. I showed you backtest for budget, monetary policy, earnings, right? Earnings is slight risky. You all can go for budget and monetary. And I discussed about the stop loss and this, that also. I won't be sharing the backtest report, but the concept is pretty simple, and the budget is already there. Budget is already there online. I'll share the budget thing. Okay, then we discussed a direction system. It's still under process. But the results, the initial results look good. Buy if 10-minute candle closes above R1 pivot. So this also you can apply on stocks which are in your watch list, right? And the logic is simple. The charts are self-explanatory. Okay, now coming to dynamic intraday trading, I would say it's like one of the most difficult forms of trading, and to be consistently profitable in intraday trading is like it's very difficult. So how to make sure that you can like trade intraday very properly is in intraday trading form. What I follow is previous day low are important levels for me. So I wait for price acceptance or rejection at those levels and trade accordingly, right? And opening is the key for intraday. As I said, price can do two things: trend or range. If it's in trend, we want momentum. It can be or either lack of momentum. In range, it could be highly volatile, low volatility, right? Only these things the price can do. So you have to understand what the price is doing. So we discussed, the bullish was simple. PDH breaks and sustains. You buy the stock. Stop loss is either previous day high or day low, whichever is lower, and you trail the stop loss. I told you, you can, once you're in profit, you can sell a call option to block the profits, because that will, you will only reduce the delta, but you're not giving up the gains. Similar thing, symbol, day low breaks and sustains, same thing. Short, get, if you're in profit, either trail the stop loss or sell put option. Previous day high breaks and reject, similar thing, which means you short the stock if it closes below PDH and trail the trade. PDL breaks and rejects. The concept is clear, but how to take the trade and manage the trade, you can do it. Okay. So intraday momentum trading, how to do trade momentum is you can follow these 4 patterns plus the R1 pattern. But how to filter out stocks? You first look for good setup stocks in your daily charts. Then you see stocks which are in news, top gainers, top losers, because you want stocks to move. Then you look for these patterns. So we are combining both. Multiple time frames are aligning. Daily is bullish and intraday pattern also confirming. Okay, we take the trade and manage. In intraday trading, it's important to lock your profits, not to give away the profits. Okay, then what if market opens within previous day range? This we will discuss in detail tomorrow. But if market opens within previous day range, this is a violin plot. It basically tells you how the distribution is. So generally, market is sideways, but the breakout can happen anytime during the day. But generally, the option premiums decay till 11, 30, 12, 1. And in the later half, it could break on previous day high or previous day low. So this is the time where you should be looking to create strangles or straddles. This we will discuss tomorrow when we discuss how to trade the index. This strategy also we will be discussing tomorrow. This I discussed, like how to treat trading as a business, right? Trading is a business. It's not simple buy or sell. That's why only 5% people, or in derivatives trading, even 1% people, only 1% people are successful when it comes to derivatives trading, because you are trading with leverage. If you go wrong even once or twice, you can lose your lot of money. So you should have a plan. So before, like, once you go home, look at this slide, see what is your capital, what is the risk you want to take, what instruments you want to trade. See, I trade bank nifty because I like bank nifty. You can trade any index you want. I know people who have traded Reliance for years and like built a wealth only just by trading Reliance. So they have mastered how to trade Reliance. So it depends what you want to trade. You have to decide what time frame. I am an intraday trader, that's why I'm using 5 minutes. It's not necessary you have to be an intraday trader. So people who are with job, they cannot do intraday trading. So you can move to a bigger time frame. So then you decide what trade setup, what will your entry logic setup. We discuss a lot of setups. Exit tomorrow we'll discuss more. Exit plan, yeah. Emotional control, that we'll discuss tomorrow. On psychology, record keeping, I'll share a trade journal. It's important to know your trades. Why did they work? Why did they not work? And you have to basically, as a trader, you should know why the winners are winners and can you replicate it. And you should know why the losers are losers. And you want to avoid them. So that is important. I'll share the trade journal and tomorrow we'll discuss on psychology and risk management. Basically, I discussed like how I do. Basically, these are certain things in intraday which I use. So if I get big bars in my favor, so I'll discuss this tomorrow when I trade. Talk about the index. So intraday momentum we already discussed how to look. Okay, for positional trading, what we can do is this is not the monthly income strategy. This is for if you want to trade directionally in a positional manner. So whatever stocks appear in your time frame, as per the watch list, as per the filters, what you can use, you can create a risk defined strategies. So it could be sell a put, buy a put, or anything you can do, and you can look at OI chain futures, OI chain for additional confirmation. And I showed you how you can manage the trade if you go wrong, right? And diversify into like different stocks for prudent risk management. So yeah, so that is it. Tomorrow we'll discuss like a lot of things needs to be discussed tomorrow also, majorly about the index, how to do risk management, positioning, and certain strategies on the index. I think today, anyone has any questions or any doubts? And how did you all find the Abhishek? Same thing, right? We already discussed. Same filters. We discussed, right, how to find out stocks which are in uptrend, candlestick confirmation, and everything. Okay, thank you. It can be automated, Abhishek. It can be automated. Definitely. Why not? It cannot. Why? It's completely objective rules, right? You can definitely automate it. Just you cannot, like, for example, you have to, if you automate it, you have to trail it. You have to trail the stop loss. Thank you, Purvi. I'll cover Snorlax. But yeah, but I won't share the backtest report. See, backtest report I cannot share because that's what it's for our own use only. But I'll give you the concept and I'll discuss that only tomorrow. So tomorrow I'll be discuss on how to do that only, how to hit the intraday theta decay. Yes, Deepak, definitely. Not even the idea. I'll give you like how to do it also. I'll discuss in detail. We'll discuss that in detail. Yeah. We'll do, and we'll create a WhatsApp group also so that I'll keep posting the trades also time to time so that you can see in the live market what is happening. Can you talk about importance of Greeks in intraday and how to manage? I would say it's not much importance, like in if you want to trade intraday, but yeah, management I already showed you, right? How you can manage basically you want to manage gamma only if you're a seller. So how you manage seller? Gamma is exiting closer to expiry. delta you don't have to manage. Theta is already in your favor if you are selling an option, right? Vega, I showed you, like Vega can be managed only if you buy options, if you are short vol. So I would say it's not very much important if you are like trading it, but having an idea definitely helps. Gamma, I told you, gamma you can manage if by exiting closer to wall risk you can manage, right? But it's okay even if you don't know like detailed knowledge of Greeks, then also it's fine. You can manage your trades. So everyone understood, right? For future data, we look at for option chain for next month. No, current month. If capital of 10 lakh, it is better to try different strategy or confine to one strategy. If 10 lakhs, I would say 5 lakhs, give it to index. And so basically what you can do is basically, if it's 10 lakhs, I would say stick to index only and don't do futures. See, don't do so much. We'll discuss this in risk management tomorrow. But if you have capital 10 lakhs, don't do futures at all. Only focus on index options. Take a smaller leverage only, 2x or 3x. Don't go more than that. And try to manage the trade. So that we'll discuss tomorrow. If you have 10 lakhs, it is better to, yeah. So focus only on index and stocks directional, do in the cash market. Don't do futures market. See the capital less than 10 lakhs, don't do futures. You can do options. And overnight, I said everything should be hedged. So we will discuss this. Tomorrow I'll discuss more on risk management psychology. I think that is more important than strategies. So tomorrow we'll discuss like entirely bank nifty only. So tomorrow like we'll give a lot of time to how to trade bank nifty, or like not bank nifty, index. I would say index intraday using what we understood today, how to do it. So I'll give a lot of time to that. How to manage the trades, how to do like everything in detail. Then we'll discuss a Wednesday positional strategy. Then we'll discuss one or more two strategies. Then we'll talk about risk management and money management and certain case studies. Okay. Thank you, Deepak. But one more disclaimer: whatever stocks I discuss, Alembic, Asian, HUL, anything, just don't go and buy. No one should message me, I bought this stock, what should I do? I follow my systems. That's why I said when you take a trade, be prepared for the loss. Because loss is only in our hands, profit is not. So that tomorrow I'll spend a lot of time on risk management. So, but now go home and think on the trading plan. What you see, you will get what you want from the market, but you should be clear what you want. So target a decent return, 3% monthly, 3 to 4% monthly is achievable if you're good at trading and if you get certain leverage. So, and as I said, money is made in spurts. So wait for, if you're trading directional, there will be definitely times where we will make very good money. So just go home before coming to tomorrow's session, think over it, what you want from the market, what capital do you have, what is your risk. Best broker for leverage is Angel Broking. So I am with Angel Broking. I would say Angel is the best in terms of, see, there are better other brokers also, Goodwill, but they are not famous, and your capital can only go there. Angel is reliable. It's one of the largest broker also, and it provides up to 10x leverage. But see, now don't go for leverage. Again, I say leverage is secondary. First be consistently profitable, then go for leverage. If you're but if you cannot make money on 5 lakh, you cannot make money on 50 lakhs. So first try to make money on 5 lakhs, try to grow that money from 5 lakh to 10 lakhs, then think of taking leverage. So I don't know what's everyone's background is, but whatever it is, if you're trading derivatives, minimum 10 lakh is necessary. Without 10 lakhs, derivatives trading is, I would say, suicidal. I would have said more than 10 also, but 10 is also fine because you get certain leverage. But whatever you do, prudent risk management is that we will discuss tomorrow, how to risk manage, how to do proper money management. So what I want is, before coming to tomorrow's session, just go through the slides. I'll share it. Again, like quickly go through it. Write on paper what you want, what is your capital, what is your expectation from the market, what all strategies fit your risk appetite. And after the session is over tomorrow, try to backtest it, and then slowly start trading them. Okay. Okay, thank you everyone. Then so we'll connect again tomorrow. I think 10 a.m. only we'll connect, right? But everyone try to make their own trading plan tomorrow before coming. What you want from the market. Okay. Thank you. Thank you everyone.